Good morning, Kalma. Give me a sec. I'm just currently sharing the link to everyone on all my social media. So, give me one second. The official start will be when you guys see me in the see me actually live. You see my face, essentially. Greetings, Luke. Welcome, welcome. Just give me a sec. Just currently sharing this with all my social media. What time is it where you guys are at? Oh, okay. I'm gonna hype myself up. In one corner is the Japanese company handbook with over 2,000 pages, covering around just under 4,000 companies. We have the Japanese company handbook. You guys just have to pretend this is it, because I don't have a physical copy. In the other corner, weighing 200 pounds, he's going to be tackling this beast of that so-called Japanese company handbook. He has a lot of coffee prepared for this challenge. The continuous compounding Allen. Okay. That was pretty cringe, but all right. Had to do some type of intro to keep things interesting. Hello, Khalid. Hello. Mazala. Is that like Mazalito? Like I see like those Rolex negotiations on YouTube. I like watching those videos. It's like Mazalito. Death Note. What was that reference of? Okay. to start, okay, for those who are new here, because I know that investors tend to spend just 5 minutes on a new stock pitch, right? So I'm pretty sure a lot of people have not read what it is I'm actually tackling today. So I'm just going to do a quick rundown and overview of the greatest stock investment challenge, okay? So a couple of things are going to happen. Ignore the July 5th. We're starting today because I had some internet issues. My apologies. Which is why today, instead of doing 4 to 8 hours, I'm hitting the limits of 8 hours stream today. I'm going hard, and I have lots of coffee ready. Okay. Later we'll vote on which coffee you guys want me to try, and I'll give a rating on it, so you guys have some reference. So if you try this in the future. Okay, so so my goal is to go through literally every single company in the Japanese company handbook. I've already did like a beta test run in early June, right? So I'm going to be starting off where I left off. So every month, the goal is I will do 4 to 8 hours a day of streaming, minimum 4 days of streaming a week until I can identify 10 A tier above stocks. So what do I mean by A tier? So for those of you who are familiar with the tier list, right, like an anime tier list, so anything that's a B or below do not count. So it has to be A or S tier for it to count. And we'll be starting on page 102. Okay, we have some comments. You should do this on the weekend sometime. Have to go to work soon. Oh no, Luke. That sucks. No, it's okay. I will be busy tomorrow, but I'm doing 4 days a week. I'm committed to that. So at least 4 days a week, I'll be doing it. It could be Sunday, it could be Saturday, it could be Friday. You'll have your opportunities to see. The latest version. So we're not. I don't have I can't read Japanese, so I don't have the Japanese version. I have the very last version that was English. That is English published. Okay. Yeah, so that's what I'm using basically. Yeah, I think it's autumn 2024. I believe that was the very last one. It was like Q3 of 2024. That was the last one. Thank you, Colin. Yes, I'm committed. I'm locked into 8 hours. So I don't know what great mujahid means. My knowledge of these words is kind of yeah, you gotta define that for me. Okay, so the goal of this is, I can't go super in depth in each name, but if an idea is interesting, I can spend anywhere between 30 minutes. Sometimes I go up to an hour on a name. And if a name doesn't look promising, I'll just try to reject it as fast as possible. So this is really good for idea gen. Every day after I'm done the stream, I will publish exactly what the tier list is, and it will be posted to my Twitter, posted to my Substack. And at the end of each week, I will summarize what were the top 5 ideas and send it to you guys as a weekly post. That is the goal. Yeah, so each day ends with a top ideas tier list based on fundamentals, value, and business quality on my Twitter and Substack. And oh yes, there's an additional twist. I'll be putting real capital on the line. I'm putting 20,000 Canadian dollars. This isn't worth that much for you US folks. That's maybe 15K or less, like 14, 15K, into a real money portfolio, okay, real money, and I'm investing based on the stocks that I reviewed on stream, okay, so it would be likely the S tier stocks and some A tier stocks, right, and then when I see fit, I'll cycle them through, right. The goal is also to be concentrated as well, so I expect the portfolio to be 5 to 10 names, somewhere like that, and then every day that there is an actual stream, I will pick one lucky new subscriber, right? So make sure to click subscribe. Currently, I have a weekly goal of 100, okay, of 100 subscribers until the end of next week, which is July 13th, okay? Sorry, end of this week, July 13th. So I need 64 more subs. So if you haven't subbed yet, please sub, okay, sub. And then you will get a monthly paid sub, okay? And then for those who are already subscribers, I don't want to, ignore you guys. So every stream, one lucky viewer will also get 1 monthly paid sub, right? I might increase this. This might, I think one month might be too little. So I'll play around. I might do some roulette style thing where I randomize how much I'm giving every single day, just to keep things fun. But yeah, those are kind of the core concepts. Okay, let's see what the comments have to say. We will unlock shareholder value for all the Mujahid. Okay, 20,000. Yes, yes, I am. Yes, thank you, Kalma, for telling me exactly what that is. See, I said 14 to 15, right? Like quick mental maths, right? Um, 20K and 100K. I hope so. I hope so. I hope I find some like 10 baggers, 100 baggers that makes my job, easy, right? 20K. Yeah, that would have to be like literally one position. Like I have to go all in one position and have that 100x, right? If I do that over 10 positions, I'm screwed. So yeah, anything can happen though. Yeah, no, the goal is to actually put my money where my mouth is and see where that takes us. I think it's fun. Yeah. Yeah, Japanese net nets, if I did a purely net strategy, I don't think that can happen. That's more like a systematic return. So it might generate like 15, 20% a year. But yeah, we'll see what we can uncover. Okay. So parameters. So each month I identify 10 A tier or S tier stocks in the Japanese company handbook. Once I've identified 10, because I'll be very critical, right? I won't just like rush by this challenge. I'll do it like very seriously. One of these ideas could be a stock pitch, right? So this is helping me with idea gen too, not you guys, but it could also be something that I would cover more in depth in the future. I will bookmark where I left off in the Japanese company handbook and continue the challenge the following month. Yeah, so once I've identified 10, next month I will do the same thing. I expect myself to start at the beginning of every month with this type of challenge. And so we won't be in a state of fatigue, right? Once we've identified 10, next month, right? Because I don't want to do this all the way until like, the end of the book, but then like by like we're 5% of the way through and you guys get bored, right? I don't want that. So I want this to be like a monthly thing, and I think it's better for me and better for you guys as well. It helps me with idea gen, and it takes me time to also come up with like a solid stock pitch, right? For my monthly or bi-monthly stock pitches. So why Japan? Why are we focusing on Japan? Because it's a goldmine of overlooked businesses. There's low valuation multiples, net cash balance sheets, generational family-run companies, stocks trading below liquidation value. And I generally just have a lot of fun analyzing Japanese companies, right? Because growing up, I watch anime, be like immersed in Japanese culture, watch TV shows, yada, 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 play arcades, right? And because I played arcades, that's kind of like what informed my round one ticker 4680 investment, right? So yeah, sometimes I just look at these Japanese companies, oh, this is very interesting, I'm learning something, and that is very stimulating to me. So yeah, so how can you follow along? So frequent live streams, I will announce my live stream schedule. I haven't done this, so this is my bad. I forgot to do this. Bad me, bad Alan. Yeah, so I will be doing, maybe next month I'll do an actual schedule. I'll send you guys the schedule so you guys know exactly what times I'll be streaming, and I'll try my best to stick to it. Okay, ooh, we have 9 concurrent viewers. Welcome everybody. If you have not said anything, don't let Khalid and Kama intimidate you guys, okay? They're number 1 and number 3 right now. You guys definitely can dethrone them. Okay, if you haven't subscribed yet, please subscribe. And tell me, which country, if you haven't commented yet, which country, or if you have commented, doesn't matter, which country are you guys from? I just kind of want to know where you guys are kind of dispersed. Okay, community portfolio voting. At key intervals, you'll help decide which top ideas get capital. Ooh, okay, this might be tough. I don't know. I wrote this in, but then I feel like the 20,000, I might, well, okay. I'm not bounded by any of these parameters, by the way, guys. So I'll get you guys a vote, maybe I'll go through it. Maybe I'll be so degen, I'll just let you guys decide what goes in my portfolio. But ideally, maybe it can be a bit of both, where you guys vote on which stocks would go in the portfolio and I decide on the sizing. Maybe something like that. Right, so that way, if I don't like the sizing, I don't like the stock that much, I can lower the sizing. Yeah. All right, I'll let you guys read the rest. But yeah, as I said before, I'm not bounded by any of these rules. I can invest more than 20,000. I can invest less than 20,000. But no, I'm probably going to invest a minimum 20,000. But I'm giving myself some leeway, right? Like if I get burnt out, I get sick, I'm not gonna, obviously not gonna, stream for that many hours for 4 days a week. It'll be impossible. So I'll be highly communicative in the process, but I intend to complete this challenge through and through. Oh, Lou, you're from America and you're living in Japan. Nice. Nice. What prompted you? What made you make the shift to Japan? Is it work related, family related, other reasons? I actually personally really would like to live in Japan for like 1 year, right? Like one of my dreams is to, I don't know if you've seen those rice paddy videos on YouTube of Japanese places, but like this is my like my dream. Okay, I get so rich that one day that I can, just go to the countryside of Japan, own like a Nissan GTR, a few of my dream Halo GDM cars, and just invest, And then after a day to unwind, I just drive my JDM car in the countryside and just enjoy the rice paddy fields. That's kind of like the visual I have. Khalid from Afghanistan. That is definitely unique. That is definitely unique. Okay, all the countries have started with an A. I'm the only one from Canada. Anyone else? Anyone else? Okay, let's start off the challenge. Let's start right here. Okay, so page 102 was where we left off last time. Yes, Tanakin, right. We went through Tanakin last time. It was a pretty good one. So I guess we're on KHC now. Nice, that's inspiring. That's inspiring. I really want to do that eventually at some point in time. Oh, okay, I'm getting a little thirsty because I've been talking a lot. So let's decide what we are going to drink, okay? So I have these two things by Asahi. Okay, I don't know if you can see. Hopefully you guys can see. One is a black coffee and one is like a latte or milk coffee. Okay? So those are the first two options, okay? Okay. And then we have some UCC coffee. All right, these are smaller. These are like in small shots. Let's see. One is it still has milk in it, but less sugar. And then this one has like full sugar. How much sugar does this have actually? Not that bad. 4 grams. 4 grams. But it's like a milk coffee. And then we have this bigger UCC. I don't know why this is bigger, but this is slightly bigger. Looks more premium. I don't know. It's like roasted beans. It says roasted beans in kanji or something like that. So, yo, comma, you mentioned TNT. Then you must be in the know. You must be from Canada. Are you? Are you? Okay, which one? Which one are we going with, guys? Oh, I should state 1, 2, 3, or 4, right? Okay. This is 1. This is 2. 3, 4, and then this is the last one. This is 5. Okay, which one? Which one are we going with, guys? Oh, we're in the same city. We're in the same city. Oh, I shouldn't have said that. Whatever. Okay, so for the 9 viewers that are on here, you guys know where I'm based in, essentially. Yeah, but we'll keep that as our secret for now. For now, okay? Okay, if you guys aren't gonna say anything, I'm just gonna go with this. Oh, 2. 2 is the black coffee. Is the black coffee. Okay. I actually bought these from Superstore. I actually find prices at Superstore lower than TNT, even though TNT probably has more variety. But Superstore has been doing a really great job of targeting like the Asian demographic. Khaled asks, in what video did you cover the first pages? So if you look back at all my previous streams, like if you look back, here, I'll go over it real quick. So this is my channel, right? If you guys haven't subscribed, subscribe. Okay, here, these first 3 videos, I covered those ones, okay? Yeah, I also have a bunch of research with me ones, but these are just random research videos. Well, not random, but I have an entire playlist for Oricon, by the way, because I've been doing a lot more detailed work on Oricon. And I have like research and work with me where I just go through like just random streams where I'm just working during the day, and I just want to stream it and then engage with audience members. Yeah. Okay. If no one disagrees, you guys have like 10 seconds to decide if this is gonna get dethroned or not, or else I'm drinking this. Okay. Okay, 5 seconds. 4, 3, 2. Okay, I'm drinking this. I'm thirsty. Okay, it's actually black, so there's no any cream or anything. It's refreshing. It's refreshing. Give 2674 hard off corporation a look. Just came across this one. I found it interesting. Okay, just FYI, I will be doing some special requests. Okay, but I have to be picky. Okay, let's do this first. We'll start off with the Japanese Company Handbook Challenge, and then after this company, we'll do 2674. Okay, Luke. So remind me after I'm done this one to go into that. Ooh, Montreal. Nice. I actually have not visited Montreal. I mean to though. I had a friend that says dating scene in Montreal is much nicer than Vancouver. Is that true, Nick? Buffalo Corp. Special request. Okay, we're only doing Japanese companies, by the way, guys. Japanese company. Okay. Maybe I can do. So in the future, I'll do other challenges. I'll do U.S. challenge. I'll do Korea challenge. I'll do Hong Kong challenge. I'll do different variations of challenges. Okay. So stay tuned for those, and maybe I can get you guys to vote on which country I'll do it next time, like U.S. Canada too. Okay, KHC. Let's look into the KHC. Okay, sales seems pretty stagnant. Operating income very stagnant. Hasn't really grown. The holding company have 5 operating subsidiaries engaging in, among others, the construction on consignment of custom-built detached homes, purchase and sale of land, sales of ready-built houses, as well as designing and construction management. So I'll just stop there. So I know that any company that's construction related, from what I initially reviewed these companies, like they aren't massive compounders. Like they're not going to be, because like you're limited by the amount of land that you can buy, and then also by the amount of like work that you can do. So it's very limited based off of like their employee count and stuff like that. But let's take a look. KUC is 1451. Oh, okay. So this is the thing about Koyfin is that sometimes if the company has been delisted, then it is not available. Let me just double check. 1451 JP stock. Okay. Did they get acquired? What the? I did not say US stock here. Easiest way to look at it is Yahoo Finance. Let me just like really. Oh, zoom in? My apologies. Okay, let's do that. Remind me in the Koyfin if it's too. Okay, I think they got it listed. I have a feeling they got it listed. They are KHC company. So KHC. Did they get delisted? Japanese Exchange Group, JPX. This is it after. Okay. Okay, next. Okay, you're very lucky. Whoever gave me that request. Who gave me the request earlier? Someone gave me it. Okay, Luke. 2674 hard off. That sounds like a very erotic name, by the way. Hard off. Why not hard on? Like why off, right? Okay, Hard Off Corporation operates reuse shops in Japan. It operates through reuse business. The company's shops offer TVs, audio and video products, computers, game watches. Yeah. Oh, I think, okay, so here's another thing about me. I really like cars. So a YouTube channel that I follow is called Mighty Car Mods. And I think they went to Hard Off to buy some car parts at one point. So yeah, okay, this does ring a bell. So they do a lot of used goods, CDs, DVDs, furniture. Okay, so the typical secondhand store, fashion accessories, yeah, trading cards. Okay, a lot of stuff, a lot of stuff. So anything that people want to get rid of, pretty much. It also directly operating in franchise stores. There's franchise stores. Okay, the company was formerly known as Sound Hokuetsu, cool, and changed its name to Hard Off. That's a very sound decision. Okay, okay, cool. Yeah, Valley Village, Japan sounds about right. But I probably much better well run. Valley Village in Canada sucks. You know, their stuff is used and it's not cheap at all. I don't feel like I'm finding any deals in Valley Village whenever I go, if I ever go. Okay, EBIT margins have been improving. It declined for a period of time and it improved. I wonder if COVID benefited them, but why is their margin so low here though? Because I would imagine COVID, if people are getting rid of their stuff, they would get rid of it at Hard Off and you could buy them for like dirt cheap, is what I'm thinking, but don't see that. SG&A has dropped, become less labor intensive, maybe? I also think that ooh, Faisal. That's a new name we haven't seen. Okay. Okay, you're really testing my pronunciation. I'm gonna butcher this. Okay. Assalamualaikum, brother. I'm pretty sure that's just me. You're saying that's a greeting. It's a nice greeting. I hope. I hope you're being nice. Pretty sure someone in the chat will be able to confirm that or not. But yes, welcome. Great to have you. Which country are you from? No, I just wanna. I've been asking any new viewer that comes on where they're from. Just want to know where people are dispersed. So we've had Afghanistan, we've had America, we have Canada so far, and different cities within Canada. Okay, Hard Off. All right. Okay, profitability. This sounds about right. Also, another catalyst for this company is tourists, because I'm pretty sure like okay. If you look at, I remember watching a video on YouTube where sometimes even in rural countrysides, that's actually where the best deals are for this type for used products. So if you get nothing from this stock pitch, it's like where you want to go like vintage clothes shopping or buy used secondhand things is to go to the countryside of Japan or like not the main cities of Tokyo, right? Because they'll have clearance sections where literally clothes can be $1, like 100 yen, 200 yen, right? And you can really find some gems there. But in Canada, damn, dude, I walk into Valley Village, I walk into what, Goodwill or whatever they're called, Marshalls or whatever, and then like, I look like a crappy t-shirt is $10. I look at a crappy hoodie is $20. Some pants are $20. Like why, like it's like you're only getting a 33% discount on what the market price of an item is. I might as well just buy it new. Right? Which is why like I buy so much Uniqlo. This is Uniqlo, by the way. Like if you're pricing it that way, I might as well just buy a brand new shirt, right? Like why would I go to you? It doesn't make sense. Pakistan. Okay, welcome. Hey guys. No, we do not beef here. We are very friendly, okay? Only nice things to say, okay? No beef. We don't start beef. Okay, the only beef today is me and the Japanese company handbook, okay? So let's not start anything. Okay, let's be very nice to each other. Okay, let's unite with our love of making money in the stock market. Let's do that. Okay, it doesn't matter where you're from. Okay, maybe there's no beef. You guys, maybe this is just a joke. Okay, just want to get that off, just in case. We're very welcome community, right? Intricate retardation. You love beef. Okay. I mean, if there's beef Canada and America, I should have beef with with Luke, right? Luke is from No, but now you moved to Japan, so I have no beef with you. Just kidding. I have no beef with anybody. Politics is politics, right? People do what they gotta do. Countries gotta do what they gotta do. Okay. Let's not get into that. Okay. So Hard Off. Margins have been improving. I think that definitely tourists going to Japan could definitely be a good thing because secondhand shopping isn't a really big thing in, I mean, it's a thing in Japan, but Japanese people don't see used goods as highly valuable as people in the West. In the West, people will buy stuff off Facebook Marketplace. We don't mind using used things, right? In Japan, like really like using new things, right? So, for example, bicycles, right? Bicycles, like people just buy brand new. There's no point of buying a used bicycle for a lot of people, right? So the secondhand market for cars, for bikes, for a lot of like personal items is just not really big. But if there's a lot of tourists and they go to these countries and they see, you know, what is offered at hard off, be like, damn, this is like a steal compared to what's available back home. Like for example, like car lovers, like car people, a lot of car enthusiasts will go to Japan, look at like, oh, there's like this like what's it, this Tomo, what's this like there's this wheel set or the steering wheel or whatever, right? And then they'll buy it from Japan and then ship it back, and they'll still be cheaper than if they buy it locally, secondhand where they live, right? Okay, let's take a look at enterprise value. So cash, more cash than debt. That's good. Okay, more debt now. Okay, so maybe there's some growth opportunities. Maybe they're opening more stores, and we'll see later. 11%. Okay, so RSC has been improving. So RSC would do better if they're doing more of a franchise model, I would suspect, if they do more franchising. And I'm very curious. Okay, so the person who pitched this to me, who is Luke. Okay, so Luke, are you aware of whether the company is doing more of a franchise strategy now or corporate-owned strategy? Because, and then when they do a franchise strategy, how does it work in terms of inventory, right? Like, how do they? Because okay, let me just brainstorm, right? Okay, if I have only corporate stores, right, then when I buy a used good from someone, like let's say you bring in like a PS5, right, and I buy it for $300, right, and I already have 5 PS5s in stock, and my current in one location, I would probably move that PS5 to a different location, right? But if you have a franchise store, how does that work? Right? Like, does that franchise store just keep whatever they buy and there's no like movement around the system? Or can the franchise store acquire inventory if they're not getting enough inventory from the other stores? How does that work? Are you able to explain that? 3612570. Okay, let me just put that as a note. I am taking requests today. But I need to also be able to go through the Japanese company handbook, or else I'm screwed, right? Let me just find a pen real quick. Give me a second, guys. Little cat pencil case here. All right. Okay, let's see. What are we using today? You're using a Pilot G2 today. Okay. So 3612. Damn, you guys are gonna kill me today. Right? Okay. Okay, Luke says, yes, I need to look into that. I'm sure 90% sure that inventory moves around. Okay, cool. 6676 Buffalo Corp. Okay. 6676. Okay. It might be a thing where I do like every 3 or 4 companies, then I do a special request, something like that. Or else I'm gonna get killed by you guys. Okay, you guys purposely killing me. Unless that's what you want to do, that's fine. Like I mean, today I'm on for 8 hours. We're good. Okay, let's see here. Yeah, that's never gonna be an issue. Okay, 8.5 times, not bad. PE 11 times, not bad. Isn't there another company that that they compete with that also does secondhand stuff? Can't remember the name. That was a company that was there. I'm just looking at my stock watch list. Okay, I can't show this, but there's another company that I think does very well in the secondhand space. Give me 1 second to look it up. Is that this company? Geo Holdings. I believe Geo Holdings is another company. me open another Koyfin tab here, guys. Yay, we have 11 viewers. Thank you. None of you guys have left. This is great. I love it. Please stay on. Okay, Geo Holdings, let's take a look. So engages in amusement business. Oh, this is not. Okay, but the company operates Geo Shops, which offer a range of in-house amusement software. What? DVDs, CDs, game titles, both rental, resell previously owned items. Yes. And sell-through format. Second Street that handles various reuse items related to daily life, such as clothing, furniture. Yeah, so I think this company's also doing very well in that department. What are their profitability look like? Let's take a look. Worse. Wow, way worse. Okay. So we have to dive into why hard off is way more profitable. And yeah, okay, what are their multiples though? What do they trade at? Okay, lower multiples. Okay, so there's justification for this multiple then. Chief Inspector, I don't know if he's lurking in the background or not. You know, Chief Inspector does what Chief Inspector wants to do. I mean, I would hope that he says something. Yo, Clouseau, if you're here, you know, say something, boy. But knowing Clouseau, he would definitely say something if he was in the chat. Okay, so let's see what it says so far. Okay, let's do long growth runway can triple the number of stores in Japan and are expand triple the number of stores. Overseas also expanding. I disagree with that growth runway in Japan. Prime locations already have stores. But most of all have grown revenues by about 10% CAGR for decades now and yet aren't priced for growth. Second Street is also really big here. Nice. 3 times. I am also suspicious of whether they can actually triple stores, because you do have companies like Geo Holdings. Yeah, but let's look into that. Okay, so hard off. Let's take a look at their website. Hard off group. Hard off. Do they do a lot of pet stuff? Like the logo looks like little paws. You know, they look like it's easy to sell. Shopping is fun, too, in this place. Luke, have you brought any items to Hard Off or any of the other used stores? Well, let's focus on Hard Off first. Have you tried to sell anything to Hard Off? How was that experience? Did you get lowballed like a mofo, or was it pretty reasonable? And have you tried other places to sell your used goods? Online store, online purchase, Hard Off app. Hard Off app. All right. I can't keep a straight face with Hard Off, man. Jeez. Do they have an English site? They do, and they have a Chinese site. Why do they have a Chinese site? Oh yeah, what's their market cap? 23 billion. So, okay, 23 billion, 65 billion from Geo Holdings. So they are taking market share probably. What's been their market cap growth over the years? So they're currently at 24, 23, 24. Okay. Grown 50% since 2015. Interesting. I get lowballed like a mofo on some items. Reasonable quotes on higher value ones. Okay. Oh yeah, do they take like LV bags? Because I remember seeing some videos where like some secondhand places will sell LV bags, some watches, yada yada yada. So like, have you brought in some like? Because if I remember correctly, you work. No, that's Haley's. Can't remember what exactly job you work, but let's say you have an LV bag, or you have some like high-end good like a watch. What type of items, and what was the price point roughly of that item, if you don't mind sharing? Okay, let's see. Hopefully there's some English IR library stuff. Financial results. It's probably the financial statement. Oh, we have an IP now. The thing about me is I love investor presentations. To me, because like I'm a very visual person. Even though I look at numbers, I'm very good with numbers, but I also like visuals. So like reading an IP is like reading like a manga book to me. So I really enjoy looking at like this type of stuff. Okay, amid the penetration of secondhand into consumers' lives and continued expansion of secondhand market, the existing store's domestic sales increased 5.8%. Okay, exceeding the previous year for 43 consecutive months. Okay, he says, Luke says, in Japan it's hard to throw things away and apartments are small, so people are happy to part with these items. Very true. Yeah, I know you guys have to you have to spend a lot of time recycling and packaging things up, and every week you guys have to put things in the right locations. Yeah, to recycle and stuff. Yep, maybe more so in Book Off. I sold a backpack for 20 bucks. Okay. Okay. But what was the price that you paid for that backpack? Like, what was the MSRP on that? I can't admit the penetration of secondhand stores into consumers' lives. I can't. That's a very hard off thing to say. Yes. SG&A increased by 10.8% due to opening costs for 24 new stores. Oh, okay. And relocation of 3 existing stores. Okay, cool. I guess when they relocate, they also like take the inventory and, or either they distribute it with existing stores and then reaccumulate inventory or send the inventory over. It's very interesting. Our same store sales increased 5.8%. Some months are better than others. Our same store sales, interesting. This year 2023, this year 2024. So it seems like June is the best. Probably people have more time now. August, September, yeah, before school starts. Yep. 60. I mean, that's fair. How long did you use the backpack for, right? Like, I think that's pretty fair, honestly. Okay, change the number of secondhand stores. So okay, let me ask you this. If you were to sell that backpack on Facebook Marketplace, how much would you be able to charge? Oh, they have hard off, off house, mode off, garage off, hobby off, liquor off, book off, liquor off. Liquor off. So I'm pretty sure they don't buy used liquor. I don't think it's a thing, right? Maybe they collect, maybe, correct me if I'm wrong, maybe they collect collectible wines like Lafite, Mouton, like that kind of stuff, right? Maybe, or some nice high-end whiskeys like Hibiki and whatever. Do they do that? That'd be interesting. Overseas they have 10, okay. So 450 stores and growing. Franchise stores, 562. Oh, very nice. So they open 31, close 8, open 25, close 5. Close 5. Okay, 1% churn rate of stores. 3 of which were relocated. So that probably counts towards that. Huh. You're saying directly owned stores is gonna, sorry, domestic stores triple. So that means you're saying, okay, 19. So you think they're gonna grow to 3,000 stores? Okay, but Luke, what is the average square foot of the stores, bro? Like how many stores does Geo have? Let's quickly take a look, because, you know what, I'm gonna ask ChatGPT, I'm gonna take a shortcut. Okay. We're gonna GPT this, see how accurate this is. Looking, okay. Assume you are an investment analyst. You are looking at Hard Off Corporation. Hard Off Corp. Ticker symbol is 2674. Ticker 2674. How many stores does it and its competitors have, i.e. Geo Holdings. Geo is 2681. You would have gotten $60 and you sold it for 20? Okay. I mean, okay, I can relate to that because sometimes I just really don't want to sell something, right? Like I just can't be bothered, right? Because if you think about the time commit, you have to message people, find someone, meet them up in some public place, and the amount of time it takes to do it, like a minimum 30 minutes to an hour, right? And if your hourly is like, I don't know if you work in IT or whatever, if your hourly is like $200 an hour, like you just, you don't deal with that kind of stuff. I can relate. They're targeting 2,000 stores. Okay, so we don't know how many stores they have. Say, okay, Geo Holdings operates 2,186 stores, comprised of 1,054 Geo outlets, 880 2nd Street, 47 in USA, 39 in Taiwan, 23 in Malaysia, 4 in Thailand. Okay, interesting. There can't be just 2 of these companies, right? There's way more than that. Oh, its main competitor is Geo Holdings. Okay, but okay. Who are the other second-hand competitors, and how many stores do they have? I'm a bit skeptical of the 3,000 store thing, but they have quite a bit of runway within Japan still, which is good enough for my analysis for the next 5 to 10 years. Okay. Book Off. Okay, Book Off is not a competitor, so that's a hallucination. Treasure Factory. The National General Recycle Shop of 100 locations in 11 prefectures. Sutaya Culture Convenience Club. Around 918 bookstores. 1,152 DVD rental outlets. 1,400 stores. Really? Combining book rental and cafe operations. I think bookstores and DVDs are on the out. How is that possible? Is this a hallucination? Village Vanguard, Playful Bookstore chain of 358 stores nationwide. Mandarake, secondhand manga, anime, and otaku stuff, 11 retail locations. That makes sense. K-Books focuses on otaku, yeah, there's a lot of anime-related secondhand stores. I know that. But they kind of combine like new stuff and old stuff as well. So yeah. These chains complement the off and it's not giving me anything conclusive in here. Yeah, I'm a little bit suspicious of whether they can do this because like if in 1 year they're able to grow like how many stores? So let's ignore the 4 here. So that they grew 52 stores out of the 900 stores. So they grew 5%. 5%. Right? So for them to get to even double, they have to do 10%, right? At least, right? They should do like 11-12% to get to 100 stores a year in order to double in 10 years, right? So okay. Sales hard off house. Okay. We've been spending some time on this, so we need to figure out how do we best allocate the next 15 minutes, which I will time on here, and to get to some level of conclusion. Okay. Okay. What were the main points? The main points were this seems kind of cheap on a 8.5 11 times PE. They have higher margins. Why do they have higher margins? That's a good question. Personal expenses, advertising, water, utility, depreciation, rent, 20%, others. overseas, franchise business, franchise sales. Franchise is half their store count, but it accounts for very little sales, but it's probably really high margin. Sales is expected to increase by 10%. Earning profit also increasing. Operating margin reaching 10%. Okay, got to bring my son to school soon, but I'll check back in. No big competition aside from Second Street that I noticed. Okay, cool. All good. Increasing dividends, 78 on what price? 78 on 17. Oh, that's a pretty good div yield. It's a pretty healthy div yield, like 4 or 5%, I think. Oops. Expected to open 28. Yeah, I don't know when they're gonna hit 2,000. Definitely not 3,000. I think they're probably aiming to hit 2,000 at some point. So maybe they have a medium-term plan. Let me see if they have one. Do they have a medium-term plan somewhere? Let's see if this has anything. Oh, they have a monthly result, so you would follow this if you're trading the stock. Wasn't I in the English website? Okay, this is the English website. Let me see. Let me quickly type Outlook forecast. Let's see, just trying to find, okay. Okay, the company established the following long-term vision: be the only one that no one else comes close to imitating by refining our management philosophy. RENK channel will be created with a focus on powerful stores and contribute to the creation of recycling-oriented society as the overwhelming leading secondhand company, not only in Japan but overseas. Hardoff's omni-channel strategy integrates various channels of stores and the internet. Hardoff's omni-channel strategy. Additionally, as part of our medium-term plan leading up to 2030, we aim to expand our business through 4 strategic pillars: brick and mortar, store expansion, online, and international strategy. For fiscal year ending 2025, the company plans to open 29 directly open stores, 16 franchise stores, for a total net increase of 45. I mean, we've already hit that, right? For the full year, wait, this is an old, wait, hold on. This is an old filing. Oops. Oopsies. Is this just IP? This is just IP. I mean, I opened that already, right? Okay, let me just take a look at forecast. Any other longer term? Do they have medium term? Medium. Ah, okay, good. Good. Okay, let's see here. The market has expanded for 14 consecutive years with a market size of 3.1 trillion. The future forecast is 44 trillion. Okay, so we can use this to do like a market cap play, market share play. The number of people who have used secondhand is 30%. The market growth is great. Okay, more and more people are using secondhand goods. Okay, opening store strategy: 1 store per 100,000 people in each trade area. Development of specialty store formats. Okay, expanding overseas: 21 stores as of now. The question is, how do they ramp up overseas store expansion, right? The good thing is that you can take some like anime goods, some stuff that's unique to Japan, and ship them over to your overseas stores as well. So you're doing like the round one version of secondhand stores within the US. Yeah, improving store attractiveness by refining assortments and displays. Okay. Store opening strategy. One store per 100,000 people. Well, there's 120 million people in Japan. Of course, some places are more dense than other places. So if we think about that, let me just think. 120 million. Let me just. Minus 5 zeros. There could be 12,000 stores. 1,200 stores. What the fuck? That's not good. You know, if that's truly the case, that's then they kind of reach their cap. You know, if that's really the case. Did I do anything not wrong here? 120 million. Yeah. 100,000. No, nothing's wrong here. Okay. Specialized stores can be open. We aim to build a concentrated store network. Population approximately 2.8 million, over 66 stores, excluding book off. Japan's population is about 125 million people. If the density of the stores in Niigata Prefecture is replicated across this country, more than 2,000 stores can be opened. Can be opened. Can be opened. Emphasis is on that. But where are they getting these type of okay, steadily opening stores in 100,000 commercial areas and further opening vacant areas. The math ain't math in here. Okay, number of group stores. 1,000 group stores exceed 1,000. Okay, so they target 3,000, but then that's like a long ass time frame. So until 2031, they're targeting opening 300 stores. So right now in 5 years they're opening 300 stores, which means each year opening 60 stores. So okay, the refinement here, Luke, is that in 5 years I can see them opening, because they're on a trajectory of opening around 50 to 60 stores every single year, right? So they're going to be opening anywhere between, if they undershoot 50, that would be like 1,250. If they overshoot like say 70, it would be like 1,350. So anywhere between 1,250 to 1,350 is probably where you're going to be at. And then once they've hit the cap in domestically, because another thing you're forgetting is Geo Holdings is not just going to sit by and be like, hey, you're going to have all these stores and I'm going to not do anything and let you buy up all the good real estate. And that's just not going to happen, right? They're going to expand too, right? If that happens, then I would see it as some overseas trajectory, and then you put XX, which means it's like we really don't know. 1,300 stores, so 30% increase. If we think about, okay, let's think about this real quick. Let's do a thought experiment. Okay, if the revenues increase by 30%, what happens? So they're at 33, let's say 33 billion yen. They increase 30%. It's like 43 billion yen. 43 billion yen. What profitability do we think they will reach? What's a conservative estimate? Okay, here's my thought process though. It could be that when you're opening more and more stores, it becomes a little bit cannibalistic in that, people make trips, especially like if you have more stores, secondhand stores, then it becomes a little cannibalistic unless you're able to have a really good store opening strategy. I don't know if 10% EBIT margin is sustainable long term. I don't know. Maybe it is. But let's assume that it is. So 43 billion. So that would be 10% would be 4,300. 4,300 at the current market cap of 24. Okay, so under 6 times by 2031. And then what is it? What's the PE is 11 times. The question is, once, okay, happens a lot of times with a lot of companies in Japan, is once the store gets to a certain level of penetration, meaning there's not much room more for growth, then those Japanese companies tend to just be hoarding cash, and what happens is that the valuation drops. The multiple actually compresses instead of retains their former multiple, right? You see that a lot because of Japanese corporate governance. Whereas in the US, what you see is a growth company that is progressing well over time still maintains their multiple. It doesn't compress, right? But in Japan, it compresses because they're hoarding cash, right? So then the only way that the multiple doesn't compress for this company is if they are able to actually invest that money overseas, right? At a similar profitability or even high profitability. I actually would think that potentially, if they operate overseas, potentially they could have higher margins. It's possible, like given round one, right? So, okay, let me just do really quick numbers here, right? So like 43 billion, 10%, right? Let's apply a 9 times multiple. Let's say 9 times. EBIT 38. They're currently at what? What's their enterprise value? Okay, so let's just say it's even, for the sake of simplicity. 24. I mean, that's for how many years of growth? 60% over 5 years. That's not very good. That is not very good. But then you get dividends. So you get like currently you get a 4.5%. 4.5%. 4.5%. So 5% over 5 years. It's not bad. It's not bad. It's not bad. And if you think that they can execute better, then you could probably buy this. I think it's a solid. I don't see it actually contracting too much though. So I think it could actually maintain a 9 times multiple here. PE of 11 times. So it's not very undervalued, but then I think it's probably worth investing in. Yeah, that's my viewpoint. Okay, so where do we put this on our chart? That's the thing, right? So over 5 years, this could be like a 90%, 100% return over 5 years. So that's actually pretty good. Is it A tier though? Okay, maybe if Luke gets back in the chat, we can determine one or the other. I don't want to put A tier for the sake of just hitting something off, right? Okay, let me look at the presentation because it's so close to an A tier. I think it's worth spending a little bit more time to determine that. Excuse me. Unique e-commerce site. I'm actually very curious how come their margins can be higher than Geo Holdings. Like that's something I'm very interested in. So I'm gonna do a cop-out method. I'm gonna ask them this. How come Hard Off is able to have higher margins than Geo Holdings? Nope, it's been 15 minutes. It's okay, we can spend another 15 minutes. All right, 70 to 75% are franchises. Stable royalty income. Geo Holdings, the majority of stores are directly owned and operated. Okay. Bears the cost of inventory. Okay, yeah. This is very similar to why fast food in Japan's margins are so good, is because they majority, like 80% plus are, don't quote me on the 80% plus are franchise. Category mix. Run specialized reuse chains. Hard Off, electronics, Audio video, off house, household goods, hobby off, liquor off. Specialization allows tighter COGS control, especially electronics and hobby goods with wide appraisal margins. Lower spoilage or obsolescence, more pricing power and differentiation. Geo focus more on general apparel reuse, especially fast fashion, urban wear. Okay. Has lower resale value and tighter gross margins, often requires higher turnover and markdowns. Operational complexity, frequent sorting, seasonal shifts. Store format and overhead. Many locations are suburban strip mall style stores, often with lower rent per square meter, lower payroll, and lease cost per store, often located near regional roads and ample parking. Drives in bulk sellers and buyers. Okay, fair. Geos, some Second Street outlets are urban focused, even high rent areas, Shibuya, Ikebukuro. Higher staffing and store upkeep costs, may invest more in store ambience. Okay, another thing about this though, you have to understand in terms of store strategy is some companies will actually purposely open stores in really crap locations just as a marketing expense. So even if the store doesn't make money, they don't care because it gives them exposure. What do I mean by this? So in Canada, there's a company called Miniso, okay, Miniso, and they purposely open stores in places like downtown Vancouver, yada yada yada, where the rent is extraordinarily high, right? And some stores definitely don't make any money, right? But it gives them some type of marketing, right? Being situated in there, even if it's like marginally not profitable, right? When someone walks by, like, oh, Miniso is here, that's an impression, right? And it kind of builds that brand power so that when people go to other locations, it adds to this. It's not the best in terms of creating shareholder value, but it makes sense if you take the marketing route. But this is where it gets risky. Where it gets risky is if you keep opening these bad stores in prime locations where the rent is high, it's going to affect the profitability of the entire network as a whole, right? And that's why a lot of these crappy businesses go out of business, right? I don't think that's the case, but I'm just saying why some people do that. Higher staffing and store upkeep costs. Okay. Inventory model. Many items are bought in bulk at low cost or sourced via drop-off consignment models. Some inventory is salvaged, fixed electronics with high resale markup, skilled at managing decentralized appraisal systems. Geo Second Street is a buy-sell trade model, but items like apparel depreciate fast, more likely to carry unsold stock marked down in heavy inventory. More waste of spoilage potential in fashion, electronics, and hobby gear. Okay, brand perception and loyalty. Hard off benefits from long-standing trust in product appraisal quality, a loyal base of recyclers, hobbyists, and collectors, consistent experience across off-chains. Geo's model through widespread doesn't have the same depth of niche loyalty. Right, so hard off with like their automobiles, I think is definitely better. If you go to Geo, it might not get like the same range, so that makes sense, right? If you have specialized stores for certain categories like anime, automobiles, you know, that would attract a loyalist to that place, right? But if it's Geo, like you don't know what you're gonna get when you go to that store. Like you're taking a shot in the dark whether they have what you were looking for, right? So it makes a little bit of sense. Okay, so mainly the franchise part is where the margins come in. So if they didn't have franchise, maybe their margins would be. So the thing to look at, if I had time, would be to look at what are their what's the profitability of their company-owned stores. Unique e-commerce site where you can purchase products from group stores nationwide. We regularly feature special promotions to highlight products from popular categories, wide range of items from junk to high price items. Purchase is updated as needed. Annual chain sales target of 7.2 billion. What is this? Oh, for the e-commerce site. See, this is what I'm not understanding. So, okay, do the items on the e-commerce site come from primarily corporate stores or from franchise stores, right? And if it's coming from franchise stores, what's the compensation for that? Do they get a commission from the franchise stores, right? And then every directly owned store item is just based off of their margin, their cost of margin, right? Nice, 7 app. That was good. So omni-channel. See, I can't compare this to Geo because I don't know what the Geo's omni-channel thing is like. 400 monthly average users. Okay, okay. So let me think about the 7.2 billion. Just really think about this for a second. So 7.2, 900 million yen from their app. So I actually think app would do better over time than their e-commerce site. Let me think. So 8 billion yen. Well, currently 5.7, sorry. 5.7, 740, 5.7, 6.4. 6.4 out of their 6.4 out of their, what was that? Am I looking at this correctly? That's not right, right? Wait a second. That doesn't make sense. Wait, hold on. I literally remember seeing 30 something. Yeah. Okay. I'm like, what the heck is this? Okay, so okay, 30, so 6.4 of that. So 20% of revs are online e-commerce. Okay, the e-commerce could actually push this into a category for me, personally. And then next year it'd be 7.2 on 9, so it'll be 8. 8, and then they expect their revenues in the next year to be, I remember having, wait, this is an old one. That's an old one. That's on, might be this document. Okay, 36. Okay, 8.4 and 36. So that is going to be still under 25%, but more than 20%. Yeah, not relying on stores is going to be good in terms of not having to pay for rent and stuff. So that's going to be good. Membership card, store search, e-commerce. Yeah. United States 5 stores, Taiwan 6 stores, Cambodia, Thailand 3 stores. So Southeast Asia and then NA. We have to closely monitor how their United States stores are doing. I think that's a main push. The good thing about the Southeast Asia ones is that shipping their inventory to Southeast Asia is going to be cheaper than shipping to the U.S. And now with the tariffs going on, right, the 50% tariff from Trump, like, you know, like, how do you put tariffs on used goods? All right, like I would say that, oh, I bought it for such a low price, you know, like, yeah. How do we account for that? Interesting. Because that could potentially affect their business success in the United States, I would think. Oh, they opened some stores in Taiwan. That's kind of cool. Ordinary profit 11%. Let's just say 10 for simplicity's sake. Very stable business. I think this is a quality business. I think this is this I would put as A minus tier. A minus tier, and we'll put that as 2674. Okay, that's that. Okay, we spent enough time on this name. We spent 10 more minutes on this, so 20 more minutes on this name. Okay, next company. Okay, 7 viewers here, and if there's any new viewers, welcome to the Continuous Compounding live stream. One thing I like to ask everybody is, which country are you from? Because so far we've had Pakistan, Afghanistan, America, and Canada. Wondering if anyone, you know, is from any other countries. Oh, KHC is no good. No good, because they're delisted, so don't bother. So was it? 1451. So we rejected one company. Or they're delisting, so there's no point. It doesn't even add to anything. Next, L is B. Provides corporations engaging in field works with support for digital transformation to resolve operational challenges. Main customers are in the construction, retail, infrastructure, transportation. The core solution is smartphone, business chat tool direct, enabling smooth business communication and reporting for workers who are mainly working in a standing position, do not use personal computers in their normal work. Direct is characterized by a service of adding functions, focusing on field works, which differentiates itself from other business chat tools. Also engages in other services derived from or related to the tool, such as support for work style reform. Okay, so are they the Slack for construction people? That's what it sounds like. Revenues are increased. It's almost 3x in 5 years. Currently got to profitability. Previously it was minus 40%. Now it's plus a little over, okay, 15%. Okay, not bad. Okay, 145A, so it's in a weird listing probably. Oh, it's listed on TSE. Okay, so it hasn't been on the market for long. Dropped to as low as 500, now it's doubled. Description. Okay, develops cloud services and offers operational support services. The company also develops smartphone, tablet, and PC applications, develops web system development, and offers construction support services. Develops UI, UX, and illustrations. In addition, it offers service development consulting services. Okay, let me take a look at profitability. Oh, we should time this so we don't go too far. Maximum 50 minutes per name. Okay, so margins have been, I thought they got quite good recently, but they don't have that much data on here as I can see. That's in stark contrast to whatever this says. 2024. So they don't have. Quarterly information. Let's see. Income statement. Do they have quarterly? Do they have quarterly? Q1. Fernando, welcome. Welcome. Fernando is in a very active viewer, which I believe, if I recall correctly, Fernando is based in Japan. Are you not? Yes, I also have coffee. Cheers. Cheers. I'm drinking Asahi Wanda black coffee. I'm almost done though. And I have 4 more coffees to go through today. Somehow I haven't had to use the bathroom, which I'm very fortunate. It's been an hour and 20 minutes. I haven't had to use the bathroom, which is nice. Okay, so I think this thing has just a complete lack of data. So whatever I look at here is going to be complete crap. So we're going to have to look at this one from scratch now. Okay. That's fine. That's fine. We do this from scratch. We do this from scratch. Okay, so this company, L is B. Very weird name. When I think of L, I think of Death Note, like L in Death Note. But L is not a bitch. L is a genius. So L is G. 1032. Very curious if that is even a 145A, I believe. 1032, yeah, correct. Kansai based. Kansai, that's, forgive me, that's Tokyo, right? Oh, oops, my bad. Kansai is Osaka. I have been to Osaka. I went to Osaka and Kyoto. So my first trip to Japan was, I went to Tokyo for 3 days, took the Shinkansen over to Osaka, fell asleep and missed Mount Fuji. I really wish I saw Mount Fuji. And then yeah, stayed in Osaka for 5 days, stayed in Kyoto for another 5 days, 4 or 5 days, and then took the Shinkansen back to Tokyo to fly back. But really enjoyed my time in Osaka and Kyoto because that's where you still see like more of the historical artifacts. What made you pick Kansai region, Fernando? Oh, LSB, life is beautiful. Make people smile with ideas and technology. Okay, so that's why LSB. Life is beautiful. They could have done LB, but then that would be little boy, right? But so that's why they have probably had to add the is part to it. Um, let's see. Because all capital. Give me your financial report, please. Please, I would need to see how you have done. First quarter. Perfect. I might have to translate this. Yes, I do. I do need to translate this. Give me a sec, guys. I need to translate. Give me a second. 145A, fiscal year 2024, filing. Okay, translation. My job's remote and my wife's parents live near Osaka, so it makes sense with the kid to have some sort of support. Ah, nice, 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 nice. It's very fortunate that um, you have a remote job that you can be with your wife. So did you meet your wife in whatever? Because did you grow up in Japan, or were you from a different country, and then where did you meet your wife? If you don't mind me, this could be very personal. Yeah. People here are warmer. You can talk to people randomly, unlike Tokyo. Oh, okay. Interesting. Yeah, well, the food culture in Osaka is also very, very dope too. Yeah. Teach us the ways. Maybe some people in the chat, might want to have a Japanese wife in the future. Okay, let's see. So no sales in 2020. No sales in 2023. Okay, interesting. This could be an easy drop then. Let me see. 5 million shares. No treasury shares. 5 billion market cap. Okay, so they had a 7747, 7748. What do they forecast? 2080, 154, 150, 115. Okay, they forecast a 7%. 7.5%. Okay. Cash. Okay, they have a good amount of cash. Contract assets, but that's probably from their IPO, I would suspect. Investment securities a little bit. Debt. They have debt. Short-term borrowings plus 60 plus 263 plus 234. Long-term borrowings. Okay, I see. It's a bit of debt. Three times book. Any NCI here? No, don't say any. Do they issue dividend? I don't expect them to though. Yes, 0. Okay, so let's just do, so previous period is 2023, 2024, 477 for adjusted operating profit. Okay, what is adjusted? Okay, adjusted operating income equals to operating income plus one-time expenses from M&A. Okay, that's fair. Diluted net income. Okay, so but I would still use, okay, fine. 13. Okay, next period. Met in Spain, got married there, then got remote job and moved to Japan to test the waters, but now it's the fourth year. Oh, nice! Congratulations. Congratulations. That's very dope. Now, do you know Japanese now? How good's your fluency in Japanese? Or do you guys speak Spanish together at home? 2080, 154, 50, 115, 30%, 30%, Japan, Spain has no tax advantage accounts like NISA or good private corporation pension plans like IRA, Roth IRA. Oh, nice. Cool. Plus, it's also healthier for you to, like, I don't know about the transit situation in Spain, but in Japan you gotta walk a lot, right? So good for your lifestyle, and you probably live longer in Japan too. Despite having to pay probably a little bit more taxes. Actually, I'm not really sure about the tax situation in Spain, so maybe you do save on taxes. But having a tax advantage account definitely helps. Okay, so let's see, cash flow depreciation. This is kind of going to be hard to determine because you have 1 year of data, so I can't really cross-check any of these numbers here. Well, loss investment securities. I mean, so CapEx, they spent 35. DNA 25, so it's probably going to increase next period. That's just overestimated. Do something like that. Probably been higher than that actually. Yeah, it can't be determined. I think this is just too hard to determine. What is their business model? Just quickly look at what the business does first. Okay, quickly look into this. Presentation materials. Again, I'm gonna have to convert this, guys. Give me a second. This is looking like a quick rejection. A quick rejection, potentially. This, because it's so early on, this company, it would have to be some type of market share play. So it's like a pretty early stage type of investment. I mean, if there's no track record, it's gonna be hard to really figure out. Okay, so specialized for people who do field work. For people who don't use PC, so like when they're standing, right, they're in the field, they're on some type of like, let's say they're on scaffolding, for example, right? Like, what do they use? They probably use like an app, right? They're, okay, designed for on-site use. Okay. Focusing on the construction industry and major companies. We have a rich track record of implementation with 5,500 companies. Construction industry, so these companies, do I recognize these? Not really. Other industries, so airport, Kokuyo. Oh, Kokuyo uses them. That's stationary. JR Rail. Okay. Sankyu. Okay. Logo chat, Shinkin Direct, OEM supply tracker. Local governments and credit unions, we provide direct as an OEM that reflects the characteristics of the users. Highly secure government-only network. Facilitating communication in a smart city environment. It also enables secure information sharing with other companies contributing to administrative. So, okay. Shinkin Direct, implemented on an automatic reception function for chat, video calls, and appointment reservations, supporting communication between Shinkin banks and customers. So Shinkin banks are like local regional banks that cater to a local population. I would put this in the too hard pile for now because it's hard to. Okay, so the step is pretty easy. If you guys want to look into this further for yourself, if you have some field of expertise in this, is just look at what the market size is and then determine, what part of the market size they're able to extrapolate from that, right? So they're trying to be essentially the Slack for fieldwork or construction companies, and that's, I don't put this in a too hard pile for now. So moving on. We gotta quickly reject ideas, So tier list, 5A, too hard pile, boom, 1.5A. Next. Let's close this. Okay, next one, Columbia Works, 146A. A comprehensive real estate developers strong in novel and original planning such as condos for lease, providing residents with free breakfast. Condos for lease, but provides residents with free breakfast? Very good. We spent less than 50 minutes on the other name, so that's good. So next one, another 15 minutes. Develops various condos for lease, hotels, offices according to land and regional specifications rather than just handling properties. Also performs custom-made development suited to needs for tenants and customers like medical checkup centers, condos. Okay, so there's real estate developers basically. Directly sells the entire building worth millions of yen to real estate investors on marketing. Properties worth 700 million to high net worth individuals. Okay, so, and their asset management firms through brokers. Engages in real estate leasing, management, and hotel operation as well. Targets, okay, so overall real estate company. Sales have increased more than double. Okay, interesting. Okay, so has anyone who's used this book know what okay, 6 means half year results, right? 2024 half year results, and then 2025 half year results. I think that's what it means. So is this what the company, is that what the Japanese company handbook forecasts themselves, or is that what the company forecasts? Because it might be different. Let me just double check. It might be in the parameters in the beginning here. Yeah, for you guys don't know, I'm looking at the 2024 autumn book. Let me just see if there's any explanation. Okay. How to use handbook, 75. 75. Okay, C. But look at C right now. Okay, forecasts of sales and profits printed in bold italic are colored gray. The forecasts are based on the wealth of data accumulated by Toyo Keizai and the company's analytical expertise. In case the settlement term has been changed, a mark indicates an irregular term or a switch to once a year settlement. These marks are placed immediately in front of the settlement term. The columns to the right of the account settlement term give data on sales, operating profit in case of SEC and IFRS method. Okay, so it is their forecast. It's not really the company's forecast. The income data. This segment presents sales and profits extracted from the company's financial statements in case of companies which issue consolidated financial statements. The income data on a consolidated basis is given and marked. immediately in front of settlement term. In case of quarterly settlement of accounts, first or third quarter earnings announced on or after March 1st, 2024, list together. Okay. So this is a forecast period, but it's based off of Japanese company handbooks reporting. So 120. Sorry, I'm 102, right? So 145 should be okay down here. Okay, so that's why this one was kind of off, because this is based off of their thing, but then this is from autumn 2024, which means that this is kind of out of date now, based off of what the company truly believes. This might be a quick pass too. 146A, because these type of companies don't really do that great. Okay, so April, 3,000, 5,300, increase 66% roughly. Yeah, I don't expect anything construction to be, oh wow, 18% margin, but then I think revenue should be quite unstable. SG&A got down, 10% income, not bad. A lot of debt. A lot of debt. Revenues of 20 billion. Cost of sales, gross profit. My worry for this company is, can they maintain this growth trajectory? That's the thing. Because anything real estate, unless it's leasing, can fluctuate drastically from year to year. But let's take a look. Okay, I need your guys' participation now. I'm officially done this black coffee. I would give it, like, it's not amazing. I would give it like a 6.5 out of 10. It's not like, it doesn't blow me away, this one. Okay, so this is what we have. We have Asahi. So this is the same brand as this one, but with, basically with milk in it, basically, or cream. And then we have a different brand, UCC. So we have milk version, and then this is the same version but with less sugar, I believe. Yeah, this one has full sugar. And then we have the UCC coffee. I don't know what this is roasted coffee, but probably with some, and also less sugar too. So, okay, so this is one. This is one. This is two. Okay. And this is three. This one is less sugar one, and this is like a normal sugar, and this is four. This is four. Which one do you guys want me to drink? Okay. Columbia Works. Let's see here. This is like a little business real quick. What they say. I like the company's website design though. Hardware and services, high value added real estate development. So they do like luxury stuff. So at Columbia Works, our project managers are in charge of everything from purchasing to development and sales, allowing us to execute our work quickly and with a sense of speed. Understanding unique needs and proposing new services, custom-made development tailored to tenants' needs. Develop BTS built-to-suit type facilities and meet the needs of tenants. We design and develop custom-made facilities such as medical checkup centers equipped with advanced medical devices. Okay, so they have some type of to cater to the medical industry as well. Brand. The company's real estate development services include offices, hotels, etc., and it develops residences under the name Blanche, Lumiec, and offices under the brand name Biasta. Blanche. Luxury residence. Residence brand that offers a comfortable lifestyle with comprehensive services. Yes, an office brand that combines functionality and design ideal for business. Also offer real estate management services, hotel management. Okay, so this is what I want to see. Okay, so a company that I really liked before that was pitched by Jeremy Raper is Shinnikin Group. The thing about that company was that they would sell a lot of property, or you know, they sell these properties to everyday salarymen, and then they would manage it for them, and the conversion rate is really high, right? So what I would like to see is a high conversion rate from sold properties to real estate management, where you get that reoccurring revenue, right? If that happens for this company, this could be a good stock to look at. What's their valuation, by the way? Forgot. Multiples. We have no clue. We have no clue. Are they profitable? Yes, they are. $3,518. 2 billion market cap, so 9 times PE. What's their enterprise value? Ooh, a whole boatload of debt. Okay, so what's the LTM on this? 37.5, so like 34, 52. 52 on 4. So that's 13. 13 times EV EBIT. So 13 times EV EBIT. 9 times PE. Because they have that. Could be interesting. Could be very interesting actually. Oh, they have English website. Let's do that, and please have some IR stuff. What's their market cap? 18 billion. 180 Canadian market cap. Okay, I'm gonna have this. This one sparks joy right now. I want some milk coffee in me. Okay, let's see how this is. Oh, this is good. This is good. So the thing about black coffee for me is that I drink black coffee for the nutritional benefits and the energy benefits, but in terms of taste, any black coffee to me is like probably maxes out at 7, right? So yeah, this one taste-wise tastes better, but is less healthy for you, right? For sure, right? Coffee taste. I give it like a 6.5. Okay. Higher library. Let's take a look. Oh, delayed. I don't like that. I don't like that. I don't like that. It's delayed. I don't really know what the corporate governance rules for delayed filings are, though. So that could be interesting. Hopefully they're not cooking the books. Oh, that was very aesthetic. Okay, corporate overview. Build a stage where everyone can shine by creating a okay, that's bullshit. Everyone is the main character, also bullshit. Curiosity, okay. Moving on. Columbia Works was founded with the goal of providing a space where people can live their best lives. Okay, so probably luxury to make each person's life shine. Okay. Fortunately, many buildings today are built solely for profit is what it means. Lacking unique concept. Departing from the prevailing profit-driven mindset, we will pursue urban management. Okay. Okay, so they're building properties for people to live in, essentially. Unicubation, uniqueness and incubation, a unique urban development mechanism that creates a cycle of imagination experience. We strive to build one-of-a-kind properties that address the challenges facing our communities from our unique perspective. Okay, so one question is, anytime you have something that's more artsy, anything that you have that's more expressive, anytime you have anything that is more unique, the question is, do they have like a lead architect at the helm, right? Like who do they get the design from, right? Because if this is a play on, they have some lead designer or famous designer, what happens if they pass away? And what happens if they don't want to work for this company anymore? We promote concept-based development to enrich people's lives. Okay. Develop stable museums. Small offices catering to remote work demand. Develop a membership-based health checkup center. Develop residences with Tesla car ride-sharing service. Develop residence with a Pilates studio. I mean, I don't think that's too revolutionary, but okay. Support breathing and health, motivating to wake up early. Sleeping surrounded by art, living with your beloved car. Okay, so this is probably luxury condos then. Future plans for concept-based development. Okay, so they're very differentiated. They're not doing boring stuff, is probably what they're saying. But how does being interesting convert into profit and scale? Because I feel like these are all one-off projects. It's not something that's scalable because every single property has its own uniqueness, right? It's like architecture. Every architect will have to survey the land, look at, oh, how do we maximize sunlight exposure, or the unique characteristics of this plot of land, factoring things like history, factoring things like the environment, yada yada yada, right? So it's very one-off based and very labor intensive actually, right? As long as they can charge a premium for it, if there's that customer base, then it'll be fine, right? But it's not a very scalable model, I feel like. What could happen is they develop a reputation as the go-to person for that type of thing, so then customers will come to them for bigger and bigger projects, right? But okay, it's been 15 minutes. So okay, let's recap on how we can get faster at this. So for the next 15 minutes, I need to figure out, okay, can they scale? How repeatable, how reoccurring are their sales and profits? Anything else? 13 times EV EBIT, not bad. 9 times PE for construction company. Okay. So they have to really sell me on their future profitability, and then it could possibly be undervalued. Due to the high percentage of sales revenue from real estate development, quarterly sales and profits fluctuate significantly. That's definitely true. In the previous fiscal year, sales were heavily weighted towards Q4, whereas in the current fiscal year, they were focused on Q3. Despite that, yeah, that has to do with every construction company. It's like highly volatile, right? If you have customers, you have customers. If you don't have customers, then you're screwed, right? Portfolio management by development type. Value-added project, development-based project, value-added project, in-house. In 2024, we undertook 7 in-house development projects, 5 in-house value-added projects, and 4 development projects partnering with other companies. Fiscal year 2025, we planned 5 in-house developments, 9 in-house value-added, and 2. So like 5, 9, 14, 16. 16, this was also 16. Sorry, oops, sorry. 16, 19 in total here. Fund-based value-added projects. Fund-based. Is that like for REITs? In the medium to long term, we aim to improve asset efficiency by expanding our portfolio of fund-based and value-added projects. So, okay, so sales increased 45%, but SG&A increased 57%. And what the reason? So that doesn't show me operating leverage, right? It shows me like, which makes sense, right? The more products you have, the more people that you need to run it. Like this is not very, I don't see operating leverage in this type of scenario. Okay, how have their subsidiaries have leasing business, business of hotels, investment advisory. Leasing business generates 367 million. How much do they generate in total? Operating profit of 4,367,000,000. So 9%, 9-ish% are high margin. Increase 200%. So that's good. So you're getting more customers. So this should be, so essentially for this type of company, as the leasing business continues to grow, a portion of their sum of parts valuation improves because you have a really highly reoccurring business in leasing, and that demands a higher multiple than their highly fluctuating real estate business. Forecast, so 80%, 90% increase in sales. Okay, wow. 5. So, okay, that's what they're projecting. 5. Definitely have some interest expense that they have to pay off, right? So that leads to earning profit dropping, net profit of 7%. %90 increase in revenue, but only 21% increase in operating profit. That's not very good. But gross profit only in, so they probably sold a very high-end project that requires a lot of money. Okay, I'm gonna quickly get through this. Okay, what this initial impression is that this is a play on several things. Number one, what is the reputation that they're going to be able to build? They are doing unique stuff, right? So the thing to track is what is their reputation, what are their ratings. I would look at what is their architecture team, like what is their design team. Have they established like a brand as the go-to for this type of thing? Because that would ensure me that the revenues are going to continue increasing. So they're going to be able to do more of these projects over time, an increasing amount of these projects and higher value projects. This points to me when they have like a 40 billion revenue is that they just added like 19 billion in terms of projects onto their pipeline, right? Which means they're being responsible for like a very highly valued project, right? Which is a good indication, right? So like at 5 times EBIT, right? Like, see, I remember they had 52 enterprise value because of debt. So that's like a 10 times EV/EBIT for next year. And then if they generate 2.75, call it 3. So around 7 times, let's call it PE. This doesn't look expensive. The question is, because real estate construction is always very volatile, right? This is going to be a play on reputation, and play on if they're going to continue to get more projects, and then seeing their leasing growing. I think those are the 3 components, but this doesn't look too expensive, so it's pretty decent, but I would put it as a B category. Yeah, so that's my recap of that. Next company. Perfect. Let's reset the timer. Oops. Next company, Soracom. Okay, 1470. Operates a unique IoT platform available in more than 180 countries and regions. Has 2 revenue sources coming from incremental revenues from consulting services at the introduction of the platform, and goods and sales, and recurring revenue of platform usage fees. Okay. Established in 2014 as Viconic, changed the company name to the present one, has been promoting the establishment of overseas subsidiaries. Okay, well, I don't like this. Also enhances the AI field by adding the function to analyze IoT data utilizing AI simply by single clicking. Has paid no dividends since establishment. Okay. So sales have, well, the company forecasts that it will double but it increased like around 50%, and operating profit also increased 50%. Okay, let's just take a look. 147. Sork. Okay, so high of 2400 down to 880, low of 700. So dropped quite a bit. Cellular Connectivity Solutions company offers Sorcom SIM, which provides 2G, 3G, and 4G LTE connectivity for SIM card and eSIM devices. Sorcom ARC that connects devices to Sorcom over Wi-Fi, Ethernet, and satellite messaging services. That sounds highly competitive. So this could be a quick move. Okay. Doesn't look very profitable. 91 times, not very good. Pretty trash. Yeah, I'm gonna skip this. Mainly because it's gonna be some type of market opportunity play. So this will be skipped. Let's put this in the. Let's just skip. 148A Hatchwork operates online monthly parking lot management system. I like this. At Parking Cloud, parking lot users can complete all parking procedures online from search, application, contract conclusion to settlement, while parking lot management firms can reduce management operation burdens, including screening, contracting procedures, and rent collection. Known for high capabilities to attract customers by posting information on parking lot properties from management firms on parking lot search portals and ad parking. Okay, so before we even start with this company, I already know a company that is competing. There's a few companies that really compete with this company, and they're doing extremely well. So one company is Nippon Parking Development 2353. Okay, they're extraordinary company. There's another one. Yeah, I don't know off the top of my head which company that one is, but let me just show you guys 2353. Really like this company. It's this company and another company that do extraordinarily well. 8864? I don't really know. Just open some of these. I'll know it if I see it, pretty much. Nope, not this company. Is it Giken? I don't think so. TKP, nope. Any of these companies? Park 20, it might be Park 24. Daiseki, don't know. Yeah, one of these companies has really good profit margins. Extraordinarily good margins. Yeah, very good margins. So essentially, what these type of businesses, the gold standard is essentially they have operate some platform where you go, let's say you're looking for parking, right? And in Japan, especially in Tokyo, you have to have budget for parking. What ends up happening is you have a lot of parking that's open, right? Not really used up. So what companies, what management of these companies, property management of these companies do is like it's free income, right? So they contract someone like Nippon Parking Development. I can't remember if Nippon Parking Development focuses on residential or office, but there's one that focuses on more on like office type or commercial parking spaces, and another company does residential really well. So there's two companies. So essentially, the property management will go to some company like this and be like, hey, we have 20 parking spots that we're not using right now. What are you giving me for it? So essentially what happens is it's like they give them rent guarantees, be like, okay, we're for sure gonna give you, like, let's say the market rate is $100 a month, you have 20 spots, so that's like 2K, right? And then they offered something like 60% of the market rate or 50%. So they offer them 1,000 or 1,200 just to buy up all the parking spaces, because then they take on all the risk of having to rent it out, and they and then they basically make that difference, right? If they're able to reach 80 to 90% occupancy levels, then they're making bank, essentially, right? So that's what these companies do. And 147A is competing in that, where there's already two majorly dominant players. But let's take a look at their profitability. That's not that company. 148A. What's the company we're looking at? Patchwork. Okay, everyone. I feeling a little bit cold. I'm gonna put on a sweater real quick. Un moment. For you guys don't know, I'm into Naruto. So I have a Uniqlo Naruto collab Akatsuki sweater. Yeah. Let's put this on real quick. Do you guys have, any of you guys have anime merch? Any anime swag, you guys? Okay, so let's see here. What's their annual? Okay, so pretty recent company. Margins are expanding, but like barely. Income statements grew 10%. Interesting. So I think 131 million on, okay, that's just like really high. 72 EPS on 2.2K is like 30 times PE. But yeah, the current valuation is it's gonna be quite meaningless because we don't know that much about the company. 186. So they are profitable. Let's take a look at share price fluctuation. Got down to 1,200, almost doubled in this period of time. Oh, we have a new viewer. Welcome. Welcome, welcome. If you haven't subscribed yet, please make sure to subscribe. And you will see a nice animation. And you'll dethrone Fabian Pesala as a recent subscriber. Yeah, I have a feeling that they're not going to be doing well, but Hatchworth offers a monthly parking lot online management system. The company offers monthly parking search portal and intermediary services. That's the same thing as what the top contenders do. But the thing about this one is there's a first move advantage, right? The thing about Nippon Parking and another competitor, which is eluding me at this current period of time, is the company with the most amount of listings is going to get the most amount of customers, right? So for example, in the West we use Craigslist. Why? Because the most amount of listings are on there, or Kijiji, right? So we don't want to go with the firm with the least amount of listings. Like if I'm looking for a 1-bedroom apartment, I want to go to the website with the most amount of listings, so I don't have to waste my time filtering through more than one website, right? Same thing with parking, right? If I'm looking for parking, I'm going to go to a website with the most amount of parking spots, not the one with the least, right? So that's what they have to, and they already lack the first mover advantage here, so that's concerning. I really don't know how they're going to be able to compete. Monthly innovation business. That's a parking lot online management support system, monthly parking search portal, intermediary service, monthly parking lot sharing service. Parking lot sharing service. Okay, at Parking Cloud, an online monthly parking lot management support service, is a groundbreaking service that allows people looking to sign a parking lot contract to complete everything online, from search, application, contract, and payment, while reducing management companies' management work, such as posting property information, screening applicants, contract procedures, and rent collection, by up to 95%. In addition, as properties are automatically posted on the parking lot search portal, parking and major housing portal sites in which data is linked, people looking to sign a contract can easily search for them, which contributes to improving management companies. Based on our company's simulation, assuming 1,000 cars under management, with 20 cars replaced every month. So nothing they say here is differentiated. Like the companies I know already do what they're doing. So I am pretty confident. Yeah, I'm just gonna skip this because nothing they say is really telling me like, hey, this is differentiated, and it's gonna be too hard for them to break in. So is this too hard? Not too hard. I mean, if I really want to confirm everything, I could. Next. Chugai mining. Okay, I've been standing this entire time, guys. I'm gonna quickly switch to my chair. Oh, my back. Okay, finally, we're out of the, it seems like we're out of the construction realm and into the mining realm. So here's the thing about doing this challenge. Another reason why I want to do this challenge is because I want to get a really good sense of all the companies in Japan. Like, what do certain industries, how do they perform, how are their valuations, and I think this helps me do that, right? Just have a really good overview of everything, right? And this is something you wouldn't get unless you actually go through every single damn name, right? Chugai Mining. Company commenced a metal refinement business at a newly salvaged gold and silver recycling facilities at Mochikoshi Mine. Following a complete withdrawal from the mining operation in 1987, it has been concentrating on recovering, refining, recycling, and selling of gold, silver, platinum, and other precious metals. The company is also engaged in the jewelry sales, real estate, and investment business. Jewelry sales seems more interesting, as well as in purchase second-hand machine tools sales as its subsidiary. It operates its stores for purchase and sale of precious metals in the Tokyo metro area, as well as principal sites. Okay, let's see. Sales have increased dramatically, honestly. Maybe it was affected by COVID. But sales increased by almost 3 times, but operating profit quite lackluster. ROE 3.1%. I'm gonna make a guess that this company had a lot of cash. Collects, processes, refines, and retails precious metals in Japan internationally. Its precious metal business division procures and recycles precious metals such as gold and platinum, refines, processes, and sells bare metals. Yeah. Okay, what's the profitability looking like? Wow. That is quite crap. That is really shit. Which makes sense, right? So if you're doing like spot rate stuff, like a premium above spot rate, let's say it's like 2%, right? Like what's gonna be their gross profit margin in this case, right? Like literally, yeah, 2.5%. Like that's already considered really good. You know? I don't know how they were able to manage 7%. This must have been like they got some inventory for cheap, maybe. And then the price of their precious metals just skyrocketed once they were in inventory. That's what it feels like. But they're probably working on really fine margins. Literally, really not the greatest business. But what are the multiples though? What? I feel like So net cash of 1.5 billion on this, so 13.5 billion enterprise value. 1.5. So Morgan asks, what website is this you are getting these financials on? Very good question, Morgan. This is Koyfin. Let me lower it for you real quick. Koyfin. Okay. Just full disclosure, I am an affiliate of Koyfin. So if you sign up using my link, you get an additional like 20% off. Just letting you know, this is my go-to tool. Right? I know some people use other things, but yeah, if you use my link, then you get, as you see here, 20% off. So, and I get a cut, So just full disclosure. But yeah, I love using Koyfin. It's very useful for looking at historicals. Yeah, offering income fluctuates a lot, so I would just put this in the too hard pile and move on. 1491. Next. Thinka 1498. Operates Kaikura. You're welcome, Morgan. I'd also appreciate it if you were to subscribe using my link. Please don't use them and not use my link. That would be that wouldn't really support the cause. All good. Okay, so operates Kaikura, platform for realizing digital transformation in communications and corporate activities. Users can uniformly manage telephone conversations, short messages, emails, and video communication. Has 3 revenue sources, namely initial cost, monthly users fees, and pay-per-use fees. Both a customer base in a wide range of industries, but mainly in the auto, nursing, real estate, officially related account service. Omotenashi denwa. So they're trying to be like a Slack/Zoom type thing. This also looks like an easy pass. Morgan, what country are you from? Let's see here. Share price. Not bad. Planning, development, operation, and sale of IT and cloud service products in Japan. The company operates Kaikura, a communication platform that manages interactions of various communication apps such as phone calls, SMS, emails, video calls, etc. Provides IT consulting. What are their profitability? These are very new companies. Decline in margins. No multiples. So okay, 3 billion market cap. Almost an entire billion, so 2 billion enterprise value. I mean, we can take a quick look here. The U.S. of A. America. Okay, so you're the second American that's shown up. Oh, thank you. Appreciate it. Yes, this is what alpha looks like. Like if you actually look at my, and not to brag, if you actually look at my track record on Substack, you're making money. So it's not, yeah. But past performance does not indicate future performance. I'm gonna quickly look at my Twitter real quick to see if anyone has pitched anything, but yeah, it doesn't seem like it. It's all good. Yeah, but appreciate you coming through from Clouseau. Yeah. Whenever Clouseau mentions me, I get like 1,000 followers. 500,000 followers. So it's like really massive for me that I have his approval. So it helps a lot for sure. Luke, welcome back. My #1 fan so far. You're getting EXP as we speak. Back-ish. So let me decipher what that means. It means I'm back, but I might have to make lunch or dinner for my wife or kids. So you're back-ish. Okay, think make the world more interesting with IT. Yeah, I don't think this will do me any good either. I'm just like, yeah, taking a look real quick. Yeah, I'm just gonna skip. I'm just gonna skip. I need to go through these rather fast. So 1498, yeah, let's just move on. I agree. JSH has two business pillars, namely regional revitalization focused support for employment of persons with disabilities and home medical care. Founded in 2016 as a consulting firm for home visit medical care, launched home medical care and support for employment of persons with disabilities. 5993 Chita Kogyo. I doubled my money on this one from where I bought it at 900 back in August. How and why? Oh, right. So I remember we did get some requests earlier, and I've gone through like probably I've rejected like 7 companies now. So it is time for me to go down the list of some stocks. Okay. So I remember someone said I think T-Bone said Buffalo, right? Let's do Buffalo. I remember him talking about this company. Let's take a look. Let's take a break and look at handle special requests. Did you want me to look at 5993, Luke? Shira Kogyo. But congrats on doubling your money. It's always good to double your money. You're asking me how you double your money? I don't know about this stock, so I could look into it if you want me to. If that's what you want. You just bought the company, but you don't know why you doubled? I don't know. I have to look into it. Buffalo, through its subsidiaries, develops, manufactures, and sells digital home appliances and computer peripherals in Japan and internationally. Digital home appliances and peripherals. Okay. The company offers various network equipment such as Wi-Fi, LAN hubs, LAN adapters, and switches, storage products comprising hard disks, SSDs, and network attached storage, and memory products comprising USB and computer. Also provides mouse USB chargers. So it looks like a general electronics store. In addition, the company offers data recovery and after-sales service, as well as software that centrally manage and monitor the status of devices, as well as various maintenance services. The company is formerly known as Melco Holdings and changed its name to Buffalo in April 2025. Why does that sound very similar? Familiar, Melco Holdings. That sounds very familiar. I think I might have looked into that company before, potentially. Well, I know why. I just thought it's a fun thing to look at for readers. You only find that kind of opportunity in Japan. Okay. So you're saying it's a potential case study? Sure, I can write it down. But right now, I want to take requests on things that you think will go from 900 to 1800. Do you have anything that you think will go from 900 to 1800? Because our goal is to make money, not to waste our time on past successes. I mean, obviously, there's some key lessons, right? But if you think there are some key learnings, maybe you can share with us what the key learning from 5993 is, instead of having me to figure it out. Unless you're trying to test me, which is fine too, but like, it would be a little bit of a waste of time. Okay, so profitability of Buffalo. I don't think it would be great. Yeah. Doesn't look great. Let's see here. Yeah, looks pretty short. But what are the multiples though? 10 times PE when it's really in decline, in a state of decline, is probably really cheap. Okay, 3.2 times EV/EBIT. So this might be a net. This is like definitely a net company. Yeah. Yeah, 17. I mean, they haven't even factored investment securities yet, so. Market cap, cash, enterprise, yeah. 11 enterprise value. 11, but how much is their operating income? Wait, 11? So EV/EBIT is 2 right now? And then in Q4 it was 1.5, so 4 times. Okay, that is really cheap. That is phenomenally cheap. This is gonna be in the gutter, right? Yeah. Okay, so we're looking at net guys, potentially. Worth looking into. What's their revenue growth looking like? No, growing. Revenues are grown, doubled. Just their operating income margin has took a massive freaking hit. That's all. How about the last 12 months? Okay, it's resurrected. As resurrected. Yeah. Still too cheap though. Okay, haha, okay. I don't have a lot of really excellent opportunities on my radar at the moment, but Endo 7841 might be interesting to look at. Kiyohara Tatsuro, a famous value hedge fund manager, owns a stake. The Kiyohara is retired, right? Yeah. Retired hedge fund manager. Interesting. See, that is stuff that sparks joy. You know, you tell me this guy that beat the Japanese market by like more than 20% a year, owns something that sparks joy. You know, that's the Marie Kondo for me. This sparks joy too. Buffalo is sparking a little bit of joy right now. I'm getting a little bit excited. You know, I haven't been excited like this for the last 10 companies. Yeah. So let's spend some time on this. Buffalo 50th anniversary. The thing is, the goods that they're producing seem like something you can produce in China for sure. You know, like nothing here looks pretty proprietary, let's say, or unique. Just something that has some margin. But the thing is, it's so cheap that but they have maintained profitability though, right? Just double check. Oh, sorry. You are right. That is my fault. I keep forgetting to update the ticker thingy, but it's because I go through them so fast. But we are looking at Buffalo. 6676. Lego. Okay. So they've been consistently profitable. Had 1 year that literally makes up the entire value of the company in 1 year. So if they do well, they can do very well. But consistently profitable though. The products they sell don't really. You know what? Let's take a look at how their market cap has transitioned over time. So, ooh. Now it's taking a nosedive. Now it's taking a nosedive. Electronics. It's tough business. Ooh, they have English, please. Yes. Cancellation of treasury shares. If they're also buying back shares, that's also very good. See, that was 15 minutes, not for the stock though. This is 15 minutes for the other stock, previous stock. Wait, they revised? Hold on. Okay, this might be a revised statement here. Prior to its murder of Buffalo Inc. Yeah, this was formerly Melco Holdings. Yeah. So let's create a new one here. This was some company. L is B. This was which one? I think it was 145A before. I believe. Okay, let me just double check on the other side. L is B. I think it's 145A. Yes, 145A. Very good recall. Buffalo 6676. 248. Yeah, this is looking interesting indeed. And they retired some shares. Excuse me. I need some water. Give me a second. Don't mind me, guys. I'm gonna have a banana while I wait for the water to boil. I'm just gonna block the camera for now while I'm eating. I'll still fill in the thing though. Wow, that's a lot of cash. Not a lot of investment securities, but a lot of cash for sure. Also, no debt. Okay, so very cheap. Extremely cheap. Okay, done. Okay, so 0.76 times price of books, so below 1 times. There, that's very good. You have a Buffalo brand mobile charger or two. Nice. I mean, so it's trading basically at dirt cheap, very dirt cheap. Yeah. What's our dividend? So 80, and lower the dividend. very little intangible assets, a lot of assets. Excuse me. Liabilities. How's the quality of the two mobile chargers? Like, those are battery banks, right? Is what you're saying. Oh, they didn't really get the. They had a very good year. Okay, so they're forecasting kind of shit next period, but still, like, this is, yeah, it's cheap. Okay, so dividend payout is likely a percentage of earnings. Yep. They're good. As far as I can tell, my impression of the brand is that they offer good quality at a low price point, a step up above most cheaper Chinese brands. Okay, good. So there's some differentiation. They're not just just crappy quality products. But does their product say made in China though? I would expect it to be made in China though, but 3071. No amortization. Okay. CapEx. That's a huge CapEx building out there. FYI, a very good, for anyone who's buying a battery bank, the thing you're looking for, why you shouldn't buy anything from AliExpress is what happens is they use recycled batteries. Meaning, okay, so anything that's 10,000 milliamperes, usually what's put inside are cells, right? So sometimes they will take recycled laptop cells that haven't fully died yet, that still have life. So each one of those cells has around like 2,500 milliamp hours, right? So they put 4 in a row. But the thing is, if you buy a cheap quality one, is it will work in the beginning. It will have that 10,000 milliamp hour, but then after maybe like, I want to say 50 cycles, then you're fucked, right? So what you want to do is buy from a reputable brand. So even in Chinese brands, there are some good ones. So like, for example, Xiaomi makes good battery packs. When I went back to China, I bought one, and that one lasted me a long time until I actually lost it. I think I lent it to someone or something, or somehow lost it. I don't know how, but it was very dependable until I lost it. And then the most recent one I had is the most recent one I bought is actually pretty good. I bought one. This one is from Energizer in Canada. So I actually found this at the airport, believe it or not. So Best Buy has vending machines at the airport, and this was originally 35 bucks. It was on sale for 22 bucks or something like that, and 10,000 milliamperes. So the thing about it is, if it's a truly brand new cell, right, it should last you around like anywhere between like 300 cycles, right? So right, full cycles, full charge cycles, right? And if you think about that, like I think 150 to 300, something like that. So you want brand new cells. You don't want like an old cell, right? And so if you think about your phone, right, you have like, in terms of, I think you probably might have like 1,000, right, on here. So the thing is, don't overcharge your phone. Don't overcharge your battery pack. Don't leave it plugged in overnight. Don't be one of those people, right? Just have, you know, once it's fully charged, unplug it, right? And that should do you well. Okay, got a little bit sidetracked. Let's take a look at historical DNA for this company so I can determine what the DNA is. Yeah, so the ones I bought off AliExpress, even though like the pictures look very nice, 10,000, 12,000 milliampere, like it lasted me like max 1 year. After 1 year, then it went through the shitter, right? So you have to buy from a reputable brand, or else you're just wasting your time. Yeah. DNA 3 billion, 2.2, 2.3, 2.5. Why is it so high? CapEx 3 billion, 4, 1.5, 1.2, 1.82. Then this year 2.2. So let's say 2,500. CapEx. Somehow since 2019 they've done a lot of CapEx. Wonder why. Is there any analyst coverage on this? Oh, there is. Okay. So they expect slightly outperformance from what the company forecasts, but I don't know if it's been revised yet because this data set is kind of outdated a little bit. CapEx 2,100. Now let's determine if this is a comprehensive one. 1,464. Number's a little bit different, but kind of comprehensive, I would say. So probably including both. This is slightly lower than whatever the hell that is. So let's just assume 2,300. It's like a 200 difference. 1,600. I just go for a higher. Actually, DNA you don't want to assume a higher number. How does it drop from 3K to 2.2 to 1.6? Doesn't really make much sense. Got an old copy of the Japanese company handbook from 2013. Buffalo's revenue was 120,000 hyakumen yen. So no revenue growth in the last 15 years. Yeah. They make non-differentiated goods for the most part, right? They're with just like a slight value by being slightly higher quality, right? You said, but like that doesn't seem very. Yeah, they're mainly doing like just mass-produced goods, right? Which, yeah. But cheap. 0.1. Everything is 0.1, right? PE 10 times, 7% ROE. No pet, RIC 1656. Oh, spent 15 minutes already. Turning operating assets, not bad. I think with further look into this company, this could be an investment. I mean, this is really cheap, right? You're paying 1 times EV and free cash flow for the company. Yes, it's 10 times PE, but they have so much cash. But then the question is, how do they unravel that cash, right? That is the question, right? That is the major thing is, what can they do here, right? Are they doing buybacks? Notice of concerning status of purchase of treasury shares and completion of purchase thereof. Buffalo hereby announces the status of the purchase of treasury shares resolved at the meeting of the board of directors held on February 12, 2025 in accordance with the provision. So total purchase price of shares, 5 billion, 2.5 million shares. Purchase period from May 1st to May 13th. What is their, hold on. They have 15 million shares outstanding. They're gonna buy 3 million of it. One sec. So, okay. So in 1 year, they already reduced shares by 1.6. Not bad. Maximum repurchase of shares is 7 billion. 7 billion. Market cap of 34. Well, 4 million. That's good. So they're aggressively buying back shares. That's what we want to see, right? So in 1 year, so they announced in February that they were going to acquire in May. So if they're acquiring in this range, then it should be pretty good. Sorry, purchase period from February to May 13th. Oh, they bought 2.5 million shares. They spent around 2,000. The company bought it at 2,000, right? And at 2,000, if we think about it, like, I just revert back. Yeah, below. So I think anything below 1 times book, they're gonna buy back, right? So low downside. So this is definitely an A. This is definitely an A. Good. I like this. I'll make this an A rank. Maybe upon further discovery. Like, the company's already buying back shares, right? And they bought by 5 billion. How is their cash balance change during that period of time? Let's take a look at cash went up, so they've been profitable. So they're cycling profits into buying back shares, which is good. Yeah, but you're buying the stock at less than price of book, right? And enterprise value is literally like almost negative. So that's creating shareholder value, which is good. Right? And if they authorize 7 billion, right, and they authorize 7 billion again, then they're gonna take that off the books as well, and that's just gonna continue to increase the value prop. No, I like that. I like it. And you're getting a positive div yield, right? They lowered the div yield, right, in favor of buying back share, which is great. Yeah, so you actually want them. You don't mind the div yield being lower, actually. No, this can definitely bump up for sure. Right? If it stays at this level, they're gonna keep buying, right? Like, they already bought at 2,000. So like, what do you stand to lose? There's 10% of your money, like 8 or 9%. So no, this is good. Even though the business is not like doing anything extraordinary, like the setup should be pretty good. But let's take a look. I do want to look at an IP though, given they already have English stuff. So. I think I have to look at the actual Japanese filing for that. I don't think they have IP for. Yeah, the Japanese portion, so that's fine. Donation of company shares. They don't have an English version of this, right? Doesn't seem like it. Doesn't seem like it. Okay, I'm gonna have to convert this. Give me a second, guys. Okay, I'm gonna quickly run through this company, and then after I'm done this company, then we're gonna take a quick break. Because I have not ate yet today, and I'm hungry, and I need a little bit of a break, mental break, just to process things. Yeah, that is a very positive signal in terms of allocation for sure. Because I think in if we look at the income statement, I think they were actually not, their earnings didn't drop. I think their earnings improved. So 2024, operating income dropped here, but net income plus 3. And if we look at LTM, yeah, it's increased, right? So increased earnings, and they expect, well, I guess it drops before, but yeah, if it was stable, like this was 120 before, right? They lowered it to 80, if I remember correctly. Yeah, so it's not, the DOE was not stable this time. I think, yeah, definitely in favor of, buybacks, which is good, very good. Okay, let's take a look at IP. So IT related business, PC peripherals, network, storage, memory, supply, service, others. I don't know how they can compete on storage, but Air Dog series, air purifiers, so unrelated. They had a food business. Random capital allocation, I guess. So IT stayed rather consistent and then improved for the year. Food dropped off and then they sold it, I guess. They got rid of it. Now their focus is mainly on IT. Okay. Shimadaya. Offering profit trends. 34.22. Food was doing decent actually. Oh, they sold it. They sold it. That's interesting. 88.45. PC peripherals. In the midst of the tough market conditions due to shrinking domestic demand and rising costs caused by the weak yen, we strive to maintain market share and improve profits by raising prices. Ryzen CPU manufactured by AMD, for which CFE Sales is the exclusive domestic distributor, sales are progressing better than expected. Forecast for 2026, assuming that the tough market conditions will continue, assuming an exchange rate of 150 yen. I mean, that's already not the case, correct? Profits are expected to improve as price increases take hold and costs are reduced. So what is USD to yen right now? 146. Okay, it's weakened a bit recently. Yeah. Okay, that's fair. 146 isn't too far away. AirDog series. Even after the price increase, sales have been steady thanks to brand activities such as allergy prevention measures. The number of department stores selling the product is also increasing. AirDog sales by 2 contact are expected to reach August. Okay. Forecast period. Okay. So PC sales expected to increase, AirDog increase, food decline. So okay, that's revenues. PC margins improving, AirDog margins improving. This should be operating profit, right? So this is historical, yeah. Yeah, but the next period they don't have any food left, so this is excluding food, so 12, 13 in terms of sales. AirDog sales are expected to drop. AirDog expected to generate a negative margin. So are they gonna liquidate AirDog? Buffalo 50th anniversary. Audio equipment manufacturer making computers easier to use. First EMS board, hard disks, business Wi-Fi, Air Connect, home Wi-Fi air station. So they make Wi-Fi stuff. Wi-Fi 7. Local Holdings absorbs Buffalo, changes its name to Buffalo, and transitions to an operating company. Seems like a tough business. April 2024, price of 1,090 Buffalo products increased. Shimadaya spinoff, October 2024. Local Holdings absorbs Buffalo and changes the name to Buffalo, transitioning from a pure holding company to an operating company. In order to ensure rapid business execution by separating management and business execution, May 2025 to improve mid to long-term incentives to improve corporate value. So let's see what that is. So. Forest management, diversification revenue sources, okay. Okay, new Buffalo, to grow sustainably by creating original value, creating added value, and distributing it to shareholders. Great. That's what we want to hear. We want to see buybacks. Buffalo focuses business on IT-related areas. The biggest structural challenge for the IT industry is technological innovation. Without resisting this wave, technological innovation will continue to create original value. How, though? Maximizing profits in the PC peripheral market. New business creation, engineering activities provided through service, synergistic M&A, active implementation. So themes: AI solutions, zero trust network, Japan domicile shift. What do they mean by each of these though? So holding company, board of directors, Melco Holdings, Buffalo. New company, board of directors, audit, execution role, each department. Okay. Building departmental organization, sales and marketing, branding, manufacturing, strategic sourcing. Foster a corporate culture that strives to maximize corporate value, aiming to increase corporate value. Value chain engineering. Our strength is an engineering cycle, and we have been continuing to deepen our engineering activities related to IT hardware.
IT is no longer limited to tangible products. It's also available to intangible form of service and solutions. Through our engineering activities, we'll celebrate their added value. How though? Doesn't answer how. Like what intangible forms are you doing something? Software related, SaaS related, what is it? Value chain engineering initiative, cost reduction. Reducing costs by restructuring the value chain. In-house domestic development. Sure. Domestic manufacturing base. That might not reduce costs, that might increase costs. Strategic procurement function. By retaining and deepening these, it's possible to rearrange the value chain. Image of reorganization of value chain. Each chain has options. Domestic company. Hardware design can be from domestic or overseas. Parts procurement can be domestic and overseas. Hardware, well, no shit. Inspection, outload. Cost reduction examples for Wi-Fi products. Domestic, overseas for hardware design, overseas for parts procurement, overseas. I mean, okay, Luke, that just means that your future power banks will be made in China. Just be real about that. The thing is, if they manufacture from China and then China has the highest tariff rates, then they can't ship those products to the US. Buffalo and Secure Inc., the Capital and Business Alliance Agreement was signed on February 14, 2025. Acquired 800,000 shares of the company by subscribing to third-party allotments, ownership ratio of 14.35%. Short-term, creation of cost synergies is the basis of collaboration. Mid to long-term, aim for collaboration that contributes to the creation of new businesses and expansion of business areas. First layer, functional infrastructure synergy. Synergy based on both companies' current products and operations. Joint purchasing, consolidation of construction and installation work, contact center consolidation. I think that's like a phone call contact center. Secondly, engineering synergy, improving products, services, and operations. Current joint development of storage and network devices, kitting, and what is secure? What is secure? What's their margin look like? I assume it's this company. May or may not be. Security solution business. Card readers, fingerprints, facial, shot, surveillance camera systems. Let me just double check if it's this company. 4264. Okay, actually, you can tell if they own it by the securities report. So if they have a securities report, I can look it up. Does this even search? One sec. Let me see if it even searches. 1 to 4 to 3. Oh, it does. Okay. Secure. What period was it in? The period was February 14th. I mean, should be. Press release. February. It's just products, bro. No. Wrong press release, probably. Translate, please. There we go. Secure ink? Secure ink. Should be. All in Japanese. Therefore, 261. There we go. Okay. So, acquire shares and secure by underwriting third-party allocation of shares. Purpose and reason for the alliance. The group's IT-related business has a midterm vision, Gateway 2.0, through network innovations, public gateway solutions, data storage optimization that aims to provide a safe network for all of society in the IoT area. It develops, manufactures, and sells digital consumer appliances and computer peripherals, and also provides data recovery services. Secure has a vision of creating new values through AI technology and security solutions. It develops and provides high-value added solutions that combine AI, image recognition technology, with physical security systems such as access control and surveillance camera systems. Following discussion and careful consideration with Secure, the company has reached the conclusion that a capital and business alliance between the company and Secure can be expected to produce the following business synergies. The expected synergies are as follows: function and infrastructure synergy, short term. Any synergies based on current products and operations of both companies. Joint purchasing, consolidation of construction and installation work, consolidation of contact centers, sure. Engineering synergies, improvement of product, services, and operations in current business. Joint development of storage and network equipment. Okay. Improvement to kitting and installation work. Improvement of equipment quality. Joint development of new services and business domain. Overseas expansion of AI solutions. So splitting DNA. That's all R&D, sorry. Not seeing like major synergies though, or anything breakthrough. People throw AI everywhere, right? The company underwrites 800,000 common shares at 1819. How much is it now? So they lost money. Great. It's good to know. What does the company look like? Let's see. Ooh. Not very good. Very low margins, if not profitable. So you just partner with a company which is in a similar predicament, I guess. I guess if there's cost synergies, it could look good, but what's the recent cost synergies look like? So Q4 2023, looks like it improved maybe a little bit, but it's hard to tell because yeah, let's see, 8 billion market cap, very small company. Yeah, hard to see. Probably just cost synergies mainly, if there are any. Yeah, it's not a big driver of anything really. Dividend payout ratio of 30-40%. So they probably lowered it to 30%, probably, which makes sense from like 80 is technically 75% of 120 yen, right? So acquired treasury shares. Due to the above, the company is expected to be exempt from the Foreign Exchange and Foreign Trade Act. Going forward, we will enable flexible investment business activities. Purchase made through the Tokyo Stock Exchange off-auction treasury repurchase trading. Financial indicators after share buyback. After share buyback effective May 9th. Financial indicators based on fiscal year ending March 2025 results. Sorry, this would be after. This would be before, right? I don't know, this is after. Average number of shares. Share of PC peripherals sold. BCN award. BCN, wireless LAN category, 23rd consecutive year. Number 1 in sales volume share, winner of 15 categories of the BCN award. Wireless LAN department, external SSD, external hard drive, HDD, NAS, USB memory, USB section, card reader, recordable DVD drive, LAN card hub. This award is given to the manufacturer of the highest sales volume of computer-related products for the year, based on sales data collected by major electronics retailers. Trends in unit share of major PC peripherals. Wow, it actually has a major... despite margins being crap, like it has major market share though, but why? Is it because of their established, like, reputation in the industry, or they literally have like the lowest cost? Like, what is it? Which is it? Sales of AirDog has also gone up, 106,000. The thing with anything appliance related, like fans in particular, it's like pretty low margin. Shareholder return, dividends, treasury share buyback, dividend payout ratio, 30%. Yeah, so they shifted the dividend payout ratio in favor of buybacks, yes, which is really good. Cash conversion cycle also increasing, which is good. To be fair, bought 2 products. So Fernando says, to be fair, bought 2 products from them. Both roll in less than 3 months. I think what you mean by that is both screwed up or both broke in 3 months. A mouse and an external hard drive. Friend of wife has the same experience. Yeah. So their award is based off of sales volume, not on quality, right? So I don't know. Maybe they're just so low cost. Most companies just go with them because they're low cost. Hmm. An HDD dying in 3 months? That's insane. That's not very good. But that should be under warranty, right? But it's probably too much of a hassle to go through warranty. Yeah. Just buy a new one, probably. Yeah, I don't see. I mean, they're just gonna keep doing what they're doing, right? They're still gonna create these categories that are highly competitive, but like, I don't know how they maintain these market shares, right? Like, how do they maintain this unit share? I don't know. I know that's something to look into, but I would put this as an A because it's just cheap. It's just like super cheap. They're still profitable. They're doing what's right from a corporate governance standpoint. So yeah, I like. Yeah. Okay, everyone. Thanks for tuning in so far. It's been 3 hours since I started the stream. I definitely need a break. I can feel my brain not firing on all cylinders. I know there's 6 of you. Thank you very much for tuning in for so long. Average view duration has been the longest I've seen in forever. Some of you guys are definitely hanging in there and really helping the stream. I'm gonna take what's a good amount as a break. I feel like I need a good amount of break. So probably like a 30 to 45 minute break, let's say. Let's say 30 to 40. Let's say 40-minute break. I'll take a 40-minute break and I'll be back. And I'll extend my stream so that I actually stream for an actual 8 hours. But I'm gonna need to eat something, drink some water, get hydrated, take a little bit of a break, mental break, and then come back focused. I still have three coffees, by the way, to go through. We've gone through two. So yeah, thanks for tuning in, guys. I'll be right back. Okay, so yes, don't miss me too much. And you guys also have a break. You guys also have your dinner or whatever. Yeah, and I will post on Twitter when I'm back on. Right, but you can stay on the stream. Stay on the stream. Yeah, yeah. See you guys soon. Okay, I just noticed that I was talking to myself for the last, I don't know, 3 minutes. No one said anything. So just talking into oblivion. So now I'm back. Now I'm back. Thanks for mentioning that I'm muted now after talking to myself for a good 3 minutes. Um, welcome everybody. Welcome, Mr. Sandman. You're new to the chat. I haven't seen you today, so welcome, welcome. Yes, we went through 6676. What is Taste Gourmet stock? What's the ticker for that? Welcome back, Kalma. Welcome back. We got Canada in the building. Mr. Sandman. Mr. Sandman, which country are you from? Taste Gourmet Group 8371. So it's Hong Kong stock. Hong Kong stock. Yeah, 8371. Wait, hold on. Planet Earth. Okay, well then we're from the same place. Wow, you know, good to know. I thought you were from Mars potentially. You know, pre-habited before Elon, right? All good, all good. There's no borders. No borders. You know, I just want to know where people are from, so that like, you know, it's just fun. It's just fun. Yeah. It's all love. It's all love over here in the continuous compounding community, right? We have no beef. We don't do beefs over here, you know. Wait, so is it a different stock? Taste Gourmet 8371. You said 8378, so that sounds like a different one. But let's just type it in. Yeah. $2. Or from $1.50. Okay, so I don't get sidetracked. You know, I will put you on the long line of wait list of people requesting, because I've had quite a few requests. I've done one so far. You are potentially number 5 on the list, or number 3, because one of them I kind of wrote bad things. But yeah, I'll review this one later on. But thanks for contributing. 8 times PE. Well, I'm focusing on Japanese stocks today, but I can review this later, okay? Because the title of this challenge is the Japanese Company Handbook Challenge, not the Hong Kong one. 8% dividend yield is nice. Is nice. Probably this is out of date a little bit. You hate Japanese stocks? Wow. I mean, now you're just making enemies. Just kidding, just kidding. I like all stocks as long as they're cheap and undervalued. Yeah. Sounds like you've been burned by Japanese stocks potentially. 10% EBIT margin. Is there a China book? Is there a Chinese equivalent to the Japanese Company Handbook? Is there a publication like that? Grok it, yeah. I do have Grok because I have that, you know, ticker mark on Twitter. Wow, impressive growth. Impressive growth. Seven times PE. What do you expect their growth rate to be like in the future? Because this is impressive growth. Why it doesn't make sense for them to be trading this low? Okay, no analyst coverage. Definitely looks interesting. I'll definitely note this as something to look at. But yeah, looks interesting. Okay, back to the Japanese company handbook. Is that where you do most of your investing in Hong Kong? Which countries do you invest in currently? Okay, Mr. Sandman says they had shady accounting firm with $2.2 and then went down to 1.3. Now it's doubled back again. Cash 60 million market cap. No, cash 60 million market cap 8. They announced 4 million buyback. I own Sound Group. That sounds cheap as really cheap. SOGP. Four-bagger. Provides audio equipment, podcast, advertising, and others in the People's Republic of China. It focuses on building audio platform to connect and communicate. The company, through its product portfolio and in-house technologies, caters to user interest in audio equipment, entertainment, and social media. This is an ADR. So shady accounting went to $1.30 and then it just goes through the moon somehow because they're too cheap. Wow, that's hard to analyze, bro. But the cash part has some merit to it. 4. Okay, severely negative enterprise value. I see why you invested. Yeah, now it's at 28 million. Drop Japan book. Maybe for a different stream. Not today. Okay, I'm a little bit hot. The temperature just increased. I'm gonna take off my sweater. I'll be right back. Damn, Mr. Salmon really trying to be #1 fan today. You guys gotta step up. Fair. I can do a stream in the future where it's that is focused on Chinese companies. But today, just to fit out the theme, it's gonna be hard. Norwegian stock with petrol, 45% dividend yield. Interesting. No, this is interesting. I would like to do more of these very deep value things that are very undervalued. This is interesting. And congrats on SRBP being able to buy that and 4-bag on that. Okay. Gonna continue on with Japanese company handbook. Okay, 1508. What did I do? Thinka? I did Thinka. 150A has two business pillars, namely regional revitalization, focus on support for employment of persons with disabilities. Oh, I think I went through this already. Yeah, I think I went through this already. Or maybe I didn't. So sales increased 50% and then operating income doubled, so that's pretty good. So they focus on supporting people with employment. Regional revitalization focus on support for employment of persons with disabilities in home medical care. Founded in 2016 as a consulting firm for home visited medical care, launched home medical care and support for employment of persons with disabilities. Provide home visit medical care services by nursing staff for psychiatric patients and earns medical service fees covered by health insurance. Has home nursing stations serving as bases in Tokyo and Osaka in the business of support for employment of persons with disabilities. The company has a business model of introducing persons with disabilities living in rural areas to corporations based in large cities that have to meet the statutory employment rate, while providing farms and related facilities for persons with disabilities to work at. Operates farms where persons with disabilities work at each prefecture in Kyushu region. Not sure if that was just translated badly. Did only 2 times where something was scared as I feel dumb. Investors came in. Give me your best stocks now. I have one coming up the pipeline that will be published on my Substack later on. Yodo, hello, continuous compounding. What a wonderful challenge I'm figuring out. Thank you. Thank you. Appreciate the support, Yodo. I mean, a hint is if you look at my previous live streams, you'll figure out which company I'm going to be writing a stock pitch on. It's pretty simple. Yeah. It's not as undervalued as the stocks you pitched me, given your company 4x'd. It's Oricon. Yeah, that's what my next stock pitch is likely going to be on. 4800 ticker, Japanese company. Yeah. So JSH has taken a nosedive from 670. Oh, very volatile stock. Went up like almost 75%, dropped back down. Rebounded, went back down. What's the profitability like? Really low margin business. $2.5 billion. They have debt 300, so 2.2. Wow, really small company. Really small company. What's the earnings potential here? So earnings increase about 50%. Operating income doubled. So let's see, 3.5 billion. What are they going to do now? 3.5. There's no quarterly. What type of quarterly data is this? Okay, so I have to manually add this myself. Okay, so let's see, it's around 4 billion now. Let's see, 140, 190, 190. So similar operating income margin. So Mr. Salmon says Seeking Alpha gives 100 to 50 to 100 euros per article. My friend with YouTube channel made 2 to 2.5k USD this month. First month of Seeking Alpha, not bad. Repost Substacks there. Interesting. Okay, I'm gonna dive a little bit deeper. Wait, before I do that, let's calculate enterprise value. 2.5, 2.2 billion. 2.2 billion on 200 million of operating income. It's around 10 times EV EBIT. And then market cap. What's their net income? 150. It's like 16, 17 times. Are we seeing the growth though? I think it's hard to ascertain. 4 billion, so let's see, 3.4 to 4 billion so far. So they're in Q2 or Q3? Q3. So in 3 months, sorry, 3 quarters, they increase only 15%. So a little bit of a slowdown. Depends what they position themselves as. Are they positioning themselves in a growth category? Okay, gonna quickly convert. Still very speculative, this company. Not expecting much, but we'll just have a look. Okay, we have the investor presentation, just waiting for the financial statement, and we can go through this real quick. creating joy and happiness through people, bullcrap. Everyone, regardless of their region, regardless of characteristics of their disabilities or occupational abilities, realizing a society where people can realize their potential through work, creating jobs for people with disabilities living in rural areas where employment opportunities are limited due to social structures. Cordial farm, under a sustainable medical system in the community where you live, realization of a society where people can live social lives together with their families, creating opportunities to receive home medical care in psychiatric hospitals where inpatient medical costs are high. Visiting nurse station, cordial. Visiting nurses are mainly for people with mental disabilities. The farm mainly caters to people with mental disabilities, but also to people with physical and intellectual disabilities. So let's see, 29 people with disability certificates. 3 million people with mental disabilities. Intellectually disabled people. Okay, financial statement over here. Number of psychiatric patients is increasing year by year. In a society with declining population, the number of psychiatric patients is increasing. As the aging of society progresses, the number of psychiatric patients is increasing significantly, especially among the age 65 and older, by type of illness, mood disorders, or depression. So, breakdown of illnesses: dementia, schizophrenia, mood disorders, neurotic disorders, epilepsy, and others. Policy-based reduction in psychiatric inpatients. Compared to other medical specialties, the proportion of inpatient medical expenses is in psychiatry 71% of medical expenses is high. Against the backdrop of rising medical expenses due to the aging population, reductions in medical expenses have been implemented as a policy, and a shift from high-cost inpatient medical care to home medical care has been promoted, leading to a decrease in the number of psychiatric hospitals. In order to reduce inpatient psychiatric medical costs, policy-driven targets have been set, reducing medical fees for long-term hospitalized patients to reduce the number of psychiatric hospitalized patients for 1 year or more. And there's an increase in demand for home medical care. So let's see. Psychiatry, circulatory, respiratory, changes in number of psychiatric hospitals. So, okay. There's a reduction, but a very gradual reduction. Okay, we have to open the Japanese version because this formatting is really annoying. Okay, we have the sound. Oh yeah, we also need the sanity check some of this stuff. So that. Okay, so 33,000 people are in the hospital for 1 year. Oh, I should put on a timer. Grab my timer. Okay, 15 minutes. The legal employment rate for people with disabilities continues to rise. The legal employment rate for people with disabilities, the statutory employment rate, is set to rise from 2.3% to 2.5%. Yes. In April 2024, and it's set to rise to 2.7% in July 2027. Okay. In the past, there was a time lag after the statutory employment rate was raised, and the percentage of companies that achieved the statutory employment rate increased, orange line. The trend is for employment of people with disabilities to expand in a wide range of companies. Okay, so this is a market play where, because of this legal statutory employment rate, and because it's gradually increasing, right, we're seeing more and more, they're tapping into this pool of people with disabilities. And then as this gets greater and greater, right, if they have the bulk of the market share, then they get to retain all of this. Private companies and people with disabilities. For the purpose of calculating the statutory employment rate, only physically disabled people were recognized as disabled people prior to 2009. This meant that private companies had been proactive in hiring mainly physically disabled people. At present, the majority of people with disabilities who are employed in general employment are physically disabled, with a large proportion of those over 55 years old, and it is expected that more than 100,000 of them will retire over the next 10 years. Currently, there is strong demand for hiring to avoid decline in the statutory employment rate due to retirement. Okay, the issue here is that, though, policies always change, right? So if there just aren't going to be that many disabled people, like let's say they do pass away, for example, unfortunately, then this rate has to come down, right? The government's going to realize there just aren't that many people to hire, right? So the idea that this has to keep going up, and that is kind of nullified, right? Employment status of people with physical disabilities by age. So most of them are between 55 to 64. The next cohort is 45 to 54. But then once these people retire, right, then they get retirement income. $677,000 people, is that what it says? Yeah, 680,000 people. So over half have physical disabilities. 23% have intellectual disabilities, and 22% have mental disabilities. I would honestly just put this in the too hard pile. Like, this could be an okay business, this could be a good business, but let me see if there's a slide on here that really just makes it look like a home run for me. The number of full-time nurses, number of visits per full-time equivalent nurse. So let's see here. Number of full-time equivalent nurses. So they have, looking to hire 137. Number of visits. Can't read that. That's really ugly to read. Number of visits is, what is that? 111,900. What is that? What's that? 11,999 here. In the home medical business, the number of visits and number of visits per full-time equivalent nurses fell short of the plan due to worsening turnover rates caused by extreme heat. Number of visits per full-time equivalent nurse is 100.1 per month. So if you work 20 to 25 business days, you're visiting 4 to 5 patients a day that you're working. Okay. This fiscal year, we will accelerate store openings to strengthen user acquisition and nurse recruitment. Number of users, 2,359. So they've missed our targets. Number of visits per user. Due to the worsening turnover rate caused by extreme heat, delays in acquiring new users, and an increase in dropouts due to hospitalization, number of users and the number of visits per user are lower than planned. That's not looking great. That's not looking great at all. That increase in number of people with disabilities accepted. 371. Total number of people with disabilities accepted. plots. Number of plots. Okay, this is for job. Regional revitalization projects. So, number of plots mean each section is a space for one person with disability. So, 2,098. The company has been promoting its dominance in the Kyushu region. But last year, it opened Sapporo Farm in December and Okayama Farm in January 2025, making its first expansion outside the Kyushu region. It currently operates 21 locations nationwide. So I'm very curious what these people do. So are you taking people without physical disabilities to do this work? Like, I'm not sure what type of jobs they're doing. And by pitching these people to these farms, are they getting like a cut of their wage? Recurring sales. You just called hard off and asked a few questions. Nice. What did you find out, Luke? Glad to have you back, by the way. Were any questions inspired by me? Not that that matters, but would be cool. ¥150,000 per month for person with disability, supporting fee for settling in, farm usage fee, hydroponic cultivation equipment rental fee. A business model that accumulates revenue through long-term use. Cost leadership, however, equipment is rented, not leased, resulting in low initial cost. The proportion of flow sales is low compared to competitors. Differentiation through support. Monthly fees paid by client companies are allocated with a focus on support. The system is designed to eliminate the cost of introducing replacements when employees leave the company, creating a strong incentive to support people with disabilities. Recruitment, sales, and recurring sales. Ratio of recurring sales is 90%. 150,000 yen per month per person? Is that $1,500 per person with disabilities? So supporting fee for settling in, farm usage fee, hydroponic cultivation equipment rental fee. What? It's page 28. My calculations show a cap of 1,233 stores at given. The answer is there is per store brand type, i.e. more than just hard off franchise. How long before you recuperate your investment on a new store? Approximately 5 years. But is that with leverage, right? So if they put down, let's say for example, they generate a 10% return and then they only have to put down like 50%, let's say, or something like that, then the amount of years it takes to recuperate their initial investment depends, yeah, if their investment is a down payment round, right? So that's harder to determine. Yeah, I would like to know how long it takes for them to own the entire store outright. I think that would be interesting too, right? Yeah. ARR, number of companies using the service, ARPA, and 12-month average churn rate. Annual recurring revenue has been increasing on a very good rate. Number of companies using the service, 172, 203. Monthly average revenue per company. $1,000. See, this is something that requires me to really deeply think and be on my A game in terms of actually determining things, because this formatting is really atrocious right now. So it's making me not even want to read this. Forecast. I mean, it could be a good opportunity. I just need a couple things to determine whether this is worth it or not. What is a stabilized rate, statutory rate that you think that could be utilized? What percentage of total working population is actually disabled? And then out of that, how much is going to be tapped based off the statutory rate? So at, let's say, 2.5%, right? And it's certain that's for certain type of companies, right? Because for a mom and pop store with 5 people, they're not going to hit that disability quota, right? So this disability quota is for certain corporations. It has to be. It can't be small mom and pop stores. That's just unreasonable, right? So out of the jobs that could be hired for, what is the percentage? And out of that, how much of the pool of disabled people does that tap, right? And that can show you what the true line could be, what could be the market potential is. But right now, this is a little bit difficult to determine. Yeah. The business targets all psychiatric patients, totaling 6.03 million people. The market is expected to continue to expand due to increase in dementia and mood disorders. Number of people with mental disabilities, 6.6 million people. Monthly visits per user of 6 times, 12 months. Cost per visit around $100, $92, 4 trillion. Room for expansion, approximately 3,000. Number of our users, 2,000. 2,000 users. Number of people with mental disabilities, 6 million people. Okay, so it says they have a large market to tap. So this is a market tapping play. I don't know enough about this company. I need to actually spend more adequate time to really ascertain the potential here, but it's hard to determine. Retention rate at work by disability, 1 year after employment. Mentally disabled people, 50%, 49%. People with physical disability, 60%. Intellectually disabled people, 68%. So people who are intellectually disabled, what does that mean actually? Intellectually disabled people mean like IQ? Okay, ID refers to significant limitations in both intellectual functioning and adaptive behavior, which covers conceptual, social, and practical skills. It is a lifelong condition that begins during childhood and affects a person's ability to learn, communicate, and manage daily tasks. People with ID may learn new skills, but do so at a slower pace than their peers. Okay, so you're tapping into this pool. General employment support. Yeah, this formatting is really pissing me off right now. Today, 49. Book Off also runs its own franchise in stores. Please ticker update, please. Oh, yes. Thank you. I mean, I'm moving on from this really quickly. Anyways, but this is this one is 150A, I believe, if I remember correctly. I am bringing up, I have too many tabs issue. Over here. Yeah, 150A. That's what I'm looking at. Here we go. So this is 680,000 general employment support. General employment, private company employees, all over Japan, companies eligible for acceptance. 1,432 people. I'm gonna put this in the too hard pile for now. Jason said, intellectually disabled. One who sees ample reasons for Metaplanet's NAV premium. Yeah. I mean, some of them I think are making that trade even though they're intelligent because they're just going with the trend. Like they see that as a trade, not as a fundamental investment of any investment area. It's just that it's worked out for, you know, whatever that other company is in the US, right? So it's just like a Bitcoin play, right? So yeah, I don't. Again, it's just like the modern equivalent to trading tulips, right? Or tuna cans or whatever. So moving on. Yeah, there's probably something there. Maybe I'll just put it as a D. It's just that the formatting is just like kind of crap, so I can't really ascertain, you know. Yeah, I need to be able to read it in order for me to do anything. So next company. Yeah, they definitely want to trade. Yeah. Like it's very simple, right? So let's say, for example, like what is it? Let's say a company decides to buy Pokemon cards, right? Right, and then in one country, in one market, right, and then that company trades at a premium to NAV, right, and then all the short sellers get screwed over, right, and then another company in Japan decides to do that and mimic the exact same business model. Well, if literally the sample size in a different region tells you what's going to happen, then that's what some people are doing, right? The fundamental investor would be like, oh, this is crap. There's no fundamental reason for this to work out as a trade. But the second level of thought process is then, okay, if we know people are trading this up, and we know people are trading it up, then we're going to screw over all the short sellers essentially, right? Yeah, that's kind of what's happening, right? My way of dealing with this type of situation, because I don't like to engage in idiocy, because I don't want to, you know, kill off brain cells in my brain, is I just, you know, see it as popcorn eating behavior. I just stay on the sidelines and see what happens, right? Yeah. You try not to engage in that type of behavior because it reinforces in the other areas as well, right? So. Okay, 1514 Sumiseki Holdings. Oh, and welcome, Jason. I have not seen. I might have seen that name in the chat before, but potentially not recently. But welcome, Jason. Thanks for tuning in today. Sumiseki Holdings started as a coal mining in 1893, switched to firm importing coal from Australia and elsewhere. The closure of the Akabira coal mine in 1994 became a holding company in 2008, controlling subsidiaries such as Sumiseki Trading, Sumiseki Materials. Its stone crushing and new material business were spun off and separately succeeded in newly established firms. Coals are imported mainly from Australia, but also from Russia and Indonesia. focusing on steam coals and major customers, including power utilities, cement. Okay. Take a look at sales. So sales has more than doubled, 2.25x, and then operating income went from negative to positive. It only goes back to 2021. There's a period of time where people were very ESG, so that could potentially be the downfall of them. But now it seems to have resurrected. 8 billion in operating income. So interesting what this company is worth right now. Thank you very much. Okay, so Jason says, well said, it's popcorn regardless of which side pushes the other offside. Yeah, exactly. Yeah. This is kind of stuff we just watch, and we don't need to have a stance. We just watch what happens, right? And then we engage in our smart behavior, the smart-ish behavior, you know? And yeah, thank you for that. Yes, I'm trying to try out new things to attract audience members and gain subscribers, and trying to do something different, right? And I'm very lazy with making content, so live stream is perfect. I get to do work, and make content at the same time, and engage with people. It's honestly very awesome. And one thing that is like a surprise point that I figured out is, for example, Luke and some other people are based in Japan. So, you know, what happens is I get to sanity check my assumptions with people who live in Japan, which is great. Leonard, Clouseau, Chief Inspector Clouseau, has not commented. So he might have tuned in but never said anything. We don't know. I'm not sure. But if he isn't tuned in now, then I don't think he's ever tuned in, because it's like 11 o'clock in New York, right? Is it? Eastern time. I'm pretty sure New York is Eastern time, right? Let me see. New York time zone. Yeah, Eastern time. So it's 11 o'clock. So if he doesn't, if he's not, you know, he's not tuning in now. He's not tuning on. Maybe he tunes in tomorrow, or well, I'm not streaming tomorrow, sadly, because I have something to deal with tomorrow. But he might tune in another day. He said he was going to. The guy, I gotta hold him to it. I gotta tell the guys like, yo, you gotta do something for me now. You owe me now. You said you're gonna tune in. Okay, Sumi Seki Holdings. Okay, stock has taken a beating. It resurrected and dropped back down. So they're like a buyer or seller. Okay, also import exporter of coal. Also manufactures and sells artificial diamonds. Artificial diamonds. Collects and processes, sells crushed stones. The company invests in coal companies. Okay, fun fact about diamonds and jewelry and stuff in Japan. Buying jewelry in Japan is extremely high priced, overpriced. Because there's a huge markup when it turns into jewelry form. So if you want to buy jewelry, it's actually better to buy it outside of Japan, not in Japan. Watches is a different thing though. But if any times you want to make custom jewelry, like a gold chain, gold bracelet, anything like that, or anything with diamonds, the markup is really high. Okay, what's the profitability of this company? Wow, they just had 35% EBIT margins somehow. So for that to happen, I speculate they had some inventory, and the value of that inventory just skyrocketed. Let me take a look at coal prices. This is something that's not really in my wheelhouse, to be honest. Not really in my circle of competence, I will admit that. Coal prices. Oh, okay, so it's taking a nosedive, but then resurrected a little bit. Oh, damn, what the frick? So people stop using coal, and then like, oh, we need coal. We need coal. Okay, we have too much coal. We good. Okay. Luxury brand like Cartier and Tiffany. Well, Cartier and Tiffany in and of themselves charge a huge design premium. A massive design premium on their products. I'm talking about markup based off of just like, let's say there's no brand, right? Like let's say you make a custom necklace with like a certain Like there's it's usually like what's the raw material, what's their labor cost, and what's the markup, right? And jewelers make a lot of money on the markup, right? Like anyone who's watched enough, Ben Baller, what's the guy, Moses Jewelry, anyone who watches any of those New York ones knows that they hire like people like design aspect is kind of bullshit, right? Because they do a 3D rendering, they put it on a 3D cast, and then and then design premium is more of who do you trust to not rip you off? That is essentially the jewelry business game. Is who's gonna rip you off the least? That's essentially the jewelry game, right? Tiffany is a little bit different in that when you have that Tiffany & Co stamp, is you're getting ripped off, but then the thing about it is because they built a brand around it, there is a higher resale value. All right, but if you're not planning to resell whatever jewelry you have, then I don't think the brand really matters. Yeah. Okay, going back, getting sidetracked a little bit. 2024. Right, so in 2024, that was well, 2022 was when 2022 was when it was really good. I'm very interested in how that was possible. Income statement. Okay, really highly fluctuating coal demand. I mean, that makes sense in Japan. That makes a lot of sense. Went to 8 billion. The company's worth 36. Okay. This is rough. This is gonna be hard to even. How do you even value this? There's too much fluctuation. 601, 36 billion. What's their LT? Total revenues 15, so it's taking a huge drop off. Operating income down to 5 now. 4.5 here, 9 times 9 is 8 times PE. Now the question is, real revenues continue to drop off. So let's see. So 15, it could drop off. What's their enterprise value? So 36 market cap. 15. So 20. 20 on 5, so 4 times EV a bit. Am I right? Yeah, 36, 15, so 21. The question is though, how sustainable is this? It doesn't look very sustainable, right? 20 EV. If you have years like this, you're put through the shitter, right? So you need to actually understand the coal demand. I do not understand the coal demand, so if someone in the chat understands anything about coal demand, please say so right now. In Japan, as it pertains to Japan, let's say. I'm gonna give this like 10 seconds. Obviously my stream is on delay, so I have no clue. Yeah. Okay, this is too hard. Unless someone speaks up, I'm gonna put this in a too hard pile, so. Oh, another mining company. Okay. Oh, it belongs to Nippon Steel. I recently watched a Japanese drama about Nippon Steel. Yeah. Founded through the spin-off of the mining department of the former Japan Iron and Steel in 1939, currently engaged mainly in the sales of limestone, produced domestically, and copper ore ingots sourced from the Matakama mine in Chile. While started its full Scale operation 2004, also laying in the quarry, machine and environment, real estate, oil trading, others. Copper is refined in Kyoto smelting, a JV of JX Nippon mining. Okay, let's look at sales. Nippon Steel. Again, just full disclosure, I am not good with commodities is not yet in my circle of competence. I will say that. Okay, sales have increased by roughly 40%. Operating income increased 30%, but operating income fluctuates from year to year. Even though sales have increased, operating income fluctuates. Oh, you're good at oil? Nice. That's good. When we get to the oil section, or as oil becomes more a factor, you can contribute, comma. I'm gonna quickly look at this, but I can tell you, like, because this is not in my circle of competence, I am very certain we might not be able to do much with it. Wow. The Tetsu. I know Tetsu is steel. Okay, went up 50% from lows. Engages in mining activities in Japan and internationally. Company mines for non-metallic minerals, including limestone, crushed stone, calcium, yada yada yada. Field-related products such as petroleum products, coal, and liquefied petroleum gas, and fine chemicals. Okay, this is also going to be rather unpredictable, I think, because you're at the mercy of commodity prices here. Okay, low single-digit margins, not surprising. So kind of grown revenues, kind of. $6.6 billion in income on 120 market cap. So like an 18 P. How much cash do they have? Okay, I see a net cash balance potentially 14 on this, so like 100 something. 14, 105, let's say. $105 at 11, so like 9 times EV EBIT. I think the question here is you have to look at it develops and operates the Atacama copper mine in South America. So from what I understand of mining companies is that you have to look at what mines that they have, what is the, what's it called? It's been a minute. Grade, like what is the ounce per ounce of whatever ton, like how much grams, how many ounces of gold are per certain ton or something like that, in order to look at potentially what is the value of the minerals that can be extracted, and then you do some type of cash flow analysis based off the life of the mine, and then you add up all the values of the mines and yada yada yada, and you make some forecasts based off of what you think the prices will be for commodities, and that's kind of how you analyze this, which is we do not have enough time to figure that out. I mean, we could look at an IP if they have an English one. I'm not gonna go through the hassle of actually translating. So, but we can have a look. And if any of you guys can teach me anything, I'd be happy for you guys to teach me. I mean, that's I have no problem admitting to not knowing something. So And thank you all 9 of you for joining me today. If you have not subscribed yet, please subscribe. There should be an animation that pops up so you can remove Fabian. Oh, we're looking in Tetsu, so I should actually change the ticker now. See, I caught myself. I'm making progress. 515 Nitetsu mining. There's price increases in non-metallic minerals and machinery and environmental engineering were sufficient to offset FX headwind and decrease volume in metallic minerals. So there's been price inflation. Fiscal 2025, worsening procurement conditions and negative FX impact in the smelting side of metallic minerals are expected to lead to year-over-year decline. New reduction policy of cross-shareholdings was implemented. Acceleration of reductions aiming to reduce holdings to below 20% of net assets by selling over 10 billion. Yeah, I also forgot to look at what are their investment securities. If they have 10 billion yen to sell, that could be pretty fruitful. Okay, let me quickly look at their financial statements, see how much investment securities they do have. Oh, we have 10 viewers. Welcome. Okay, that's not it. Wrong file. Wow. Wait. That's really good. Wait a second. This looks really good then. You have 39 billion of investment securities. So, okay, hold on a sec. So, okay, so that's 14, right? Let me double check these numbers real quick. You have 38 lease investment assets. Let's ignore that. It's okay. Short-term payable, what is there? Short-term loans payable, okay, so 12 billion. Long-term loans payable, so 23. Last period it was 22.5. Okay, it's also around 23. It's just more long-term payables. Okay, 23. 23 on 38, so still around 15. 15 off of this is going to be, let's say, 103, and we minus 39 from their investment securities. So let's call it 40, so around 64. 64 billion enterprise value. And they're selling rapidly their cross-shareholding, so they said they're going to sell 10, right? So that's going to be realized as cash. So 64, and then if you do 64 on 11, 6 times. How about annualized? So let's say 64 on 7 even. 7, that's 9 times. Or 9 times would be 7 times. If it's 9 billion, then it would be 7 times. Question is, are they gonna, what's their corporate governance like? Are they gonna buy back shares? What are you gonna do with that money? What are you gonna be doing, buddy? Take a look at corporate buyback. Okay, let's see. So price to book ratio, it is currently above 1. Apparently. Share buyback. new reduction policy in cross shareholdings in May 2025. Okay, that's probably what has led to the price going up. So it's kind of factored in. It's kind of factored in. New reduction in share cross shareholdings. 20% of ratio to net assets by selling over 10 billion JPY. So they have a net asset balance of how much? Let's take a look. 151. So 20% would be 30. So okay, they're only gonna sell 10 then. They're only gonna sell 10. So over time too, over the next 2 years too. I mean, if anyone has a better understanding of like these mines and stuff like that, then I can reason around it, but this would be in a too hard pile. But good to know that they have so much so much in their inventory. So clearly though, when it was at 5,000, let's say 5,500 yen, so when it was, let me take a look at that. So Q2, let's take a look. $75, 71, lowest 71, 71 with like, let's say 40 billion. Yeah, with less debt too, so it's trading at literally at 20, something like that. Yeah, it was definitely very cheap before that, so makes sense. Oh, it's even cheaper. 4,500 down to 4,000. Yeah, it was really cheap, but now it doesn't look as cheap now. So moving on. This one is more of a. It's not. It is too hard, but then I would say it could be like a C or D. Like if you knew what you're doing, it could be even a B. But sure, let's give it one. Get some water real quick, guys. Throat's feeling dry. Do any of you guys take hauls? I like hauls. Alright, next company. I have a lot of tabs open. Let me just organize this a little bit. I don't think I need any of this other stuff. I think we're okay. Okay, next company. Mitsui Matsushima Holdings. Originated as Tatsushima Tanko, established in 1913, scaled down the coal mining business in reaction to a decline in World War II, absorbed Mitsui Mining, changed corporate name to Mitsui Matsushima in 1983, shifted to the imports of foreign coal following the closure of Ikishima coal mine in 2001. Coal firm in Indonesia. Withdrew from the coal business after completion of mining at the Liddell mine in Australia, to which the company had the production rights. Started activating M&A in 2012. That's an interesting word of saying. I started activating live streams too, as of last month, and has been acquiring niche top companies. The management team led by President Yoshioka is a self-avowed group of M&A professionals aiming to survive by shifting to a business investment firm. Okay, so their holding company sales have increased. Operating income fluctuates quite a bit. Japanese company handbook determined that sales would decline and operating profit would decline substantially as well. So they're basically projecting that they had some one-off operating income good years. Let's take a look. 1518. Matsushima Holdings, through subsidiaries, engage in consumer goods, industrial products, and energy business in Japan and internationally. The company operates, generates, and sells solar power to electrical power companies. The company operates, produces, and sells drinking straws and food containers. Okay. Office equipment, centering on shredders, sells pet food. Okay, they do a lot. In a bunch of sectors. In a bunch of sectors. Wow, okay. Okay, EBIT margins all over the place. We have 10 viewers. Welcome. Welcome, everyone. Thanks for joining me. If you have not subscribed, please subscribe. Really low margin. Oh wait, that's in 2015. Okay, over here looks a lot better. So how's that possible? Did they just have a really good year of mining some year? And now that the life of the mine has gone down. Hello, H-Low. Hello, welcome. Thanks for joining me. What country are you from? H-Low. Let's take a look at the income statement. So it went down and it went back up in these two periods. Operating income probably increased substantially. There were 56 billion market cap. Some periods of huge outperformance here, but prior to this was really crap. US now. Nice. Another, you're like the third American that has shown up on stream or self-identified as from the US. Yeah, we'll have to look into that. They're a major holding company, so they have a lot of different segments. Yeah, I suspect this is related to their mining, where they had a period of huge price hikes, right? Because if you look at coal prices before, it was really high, up to like $450, right? So maybe they sold off a lot of their coal inventory during that period. Could be. Now it's down to 5, so now they trade at like a 10 times PE on LTM basis. This might easily just go into my too hard pile, honestly. How much cash do they have? Ooh, they have more debt though. They have more debt. Nippon Straw. Mako Shokai, KMT. Nippon, a lot of different companies here. Okay. Oh, they have English site. That's dope. All right, let's see here. Acquired some companies. Real estate secured lending business. I need some water, guys. Give me a second. I start feeling a little bit iffy right now, but I'll try to just talk in a lower voice. See if that helps. Completion of transfer of the Liddell coal mine in Australia. Transfer interest in the Liddell coal mine to Glencore. I've heard of Glencore before. Recording approximately income of 2.7 billion yen. So they might have had some like one-time profit from selling the Liddell coal mine, like realized some gain. Let's look at coal prices per ton. Look at that real quick. They sold in 2024. That's already past its prime, so 150. February 2024. Okay, still okay. Yeah, recording extraordinary income of 2.7 billion. 2.7 billion. In the grand scheme of things, given how much they earned in 2024, it is not that big of a number, honestly. Oops. Doesn't show up here though. Increased dividends to 130. 130 on this is around 2.6%, something like that. Not a lot. Okay, so this will forecast 8 billion in profit, but they have more debt. Oh wait, one thing I wanted to look at was exactly how much investment securities do they have. Oops, what just happened? And that information is not here. They have their entire No, I want the actual filing, bro. Brief explanatory note. Okay, I'm gonna quickly look at their Japanese side then. going to make my life that much more difficult to look at things. Okay, 11 billion. Oh, but then huge reduction in cash though. Oh wait, hold on. This might be short-term investments. It's weird that they have that, but not an English version of their financial report, which is really strange. Okay, I'm gonna quickly convert that. Should I do that or should I just... Okay, I only need to know a few things, so let's just convert this real quick. Okay, I'll call that short-term investment because it's on the current asset side. 35, 43, 43 on 11. Thank you, Luke. I'm probably spending too much time on it. I would agree. I might be taking too much time. 943. I always, okay, my mindset is this always. It's like some things can be very easily discarded, but then like there could be a unique angle, right? And then if you discover some insight that's a unique angle, it could generate quite a bit of alpha if most people just reject it. So one example would be SK Japan, right? Once I learned that the company was 66% owned by Round 1, then that prompted me to investigate the company a lot more. And then I realized, hey, Round 1's opening stores in the US, and then SK Japan sells plushies, and they established SK USA, which means they're going to sell to Round 1. So, yeah. Yeah, so, I mean, yeah, there's no right or wrong answer. It's just like whether you feel, at what threshold do you think it's worth putting more time? I think I'm just going to skip this one. Yeah, I'm not feeling it with this company. Too hard pile for me. Let's just put it that way. And I have a feeling I might actually have to skip a lot of these ones because I'm just not that into these companies. Next one, Dive. Okay, finally, something different. Oh, okay. Engages in the Dive 151A engages in the referral and staffing of part-timers to tourist facilities, including resort hotels, Japanese-style inns, restaurants, theme parks, ski resorts. Okay, started business in 2002 and formed a current entity in 2007. Seeks workers on dedicated staff registration website Resort Baito Dive. Has a track record with over 4,600 facilities. Expanding its targeting of staffing to senior and non-Japanese workers, in addition to existing young workers, has engaged in the internal planning and management of glamping accommodation, glamorous camping, I think that is what that means, since 2019, as measured to revitalize less touristy sites in rural areas. Okay. Revenues, profitable. Let's see how they've done. Okay, so relatively new company. Dropped to 700, up 30%. Dive primarily provides staffing, recruitment resources for resorts. So I actually know a family friend who's from Australia who actually works at one of the ski resorts, and they're Australian. And I'm pretty sure she's not fluent in Japanese. So, yeah. But I don't know if it's from this company. So, but that is a thing. Starting to ramp up operating margin. Okay, no data. Sure. So, okay, Koyfin does not have the data for this company. Okay, so 4%. Okay, this is also like a market size play now, right? What is going on? Okay, 1518 diving. So um hmm. Anyone know where I can find their IR site? Okay, let's not translate this. Let's go like this. Ah, I'm a genius. Not really. Oh, it is dot design. Interesting. So let's convert that. IR movies. Interesting. Very promotional. Share buybacks. Interesting. Who bought them back? Is the CEO? Balloon K. So this is like half year report. I can't translate this. I have to guess based off the kanji which one's which. Business report. So operating profit has suddenly flipped a switch. Where do they expect it to go though? COVID impacts. I mean, yeah. So Buffalo. I mean, you could literally rewind it to my conclusion, but I like Buffalo. Um, and the reason why I like Buffalo is because it trades basically, close to basically break even in terms of enterprise value, like basically zero EV, right? But then they're aggressively buying back shares and they're trading below price to book, right? So not only are you getting like a decent, what's the div yield on that? Give me a sec. 3.6% div yield, but they're buying back. Last time they bought back 5 billion in market cap. So that's very good. So they are definitely actively returning returns to shareholders. And yeah, just overall cheap. You can buy for 1x free cash flow. And like enterprise value wise, and then aggressively buying back shares below 1x book. Good things happen. So that's a verdict. Yes, you know. Oh, but that wasn't an acquisition though. That was with that wasn't an acquisition. That was essentially just like a business. They bought like 14% of shares of this other company, right? And it's mainly just to share cost synergies with a not so great business as well. But then it's not bad. What are these filings? I wish I could have some English. Oh my gosh. IR information is what I see here. I see response in kanji. Nah. I don't see any periods. Is this one? Is this one? Okay, this is the same thing. Okay. I'm partially on the way out of this company, just that I can't find the filing. If I can't find it, I'm just gonna move on. Who the fuck cares? Oh, okay, I found it. Okay, cool. It's like the company heard me. It's like, okay, if Alan's not gonna fucking undo this, then we're gonna have to please him as soon as possible, you know? So, Q3. My patience has a limit. Translating, guys, don't worry, I'm just translating. Wait for it to finish translating and then I can pull it up. Hopefully it translates well, unlike their website. If it doesn't translate well, I also have no choice but to skip it. Okay, not bad. Regional revitalization business, tourism, human resource business, tourism HR. I guess the idea of tourism HR is that people can travel to a country and work there and also experience the country. I think that's kind of what they're trying to get at. Increase in sales from job placements. Okay, so comparison of our sales and number of foreign tourists visiting Japan. Sales. Number of foreign tourists visiting Japan. More than 90% of the total number of travelers are Japanese. Solid demand from Japanese tourists is also important. So local travelers, people who are traveling domestically. Tourism HR KPIs. Okay, number of employees, sales per employee. What does that look like? Let's see. Strategic advertising investments have paid off in the number of employed people. exceeds last year's figures at the end of the third quarter, reaching a record high. Due to factors such as extension of employment periods, sales per employee (LTM) increased by 12.2% compared to the previous year. So people extending their stay in Japan who are foreign employees. Number of employed people has increased. 12,000. But the thing is, the increase in the number of people employed has exceeded pre-COVID, but hasn't drastically improved. But it has resumed some type of trend. Sales per employee. What units are these in? Let's see. Is that in 10,000? What are these metrics? So, because it says 24, 6 quarter, third quarter, 1.2 million yen. Let me just open a Japanese filing here. That's probably easier. 5. Yeah, so this is in 10,000 yen. So this is 1.2 million. Let me just double check. My 1.2 million equates to, I believe it was like 12,000 Canadian. USD, this would be like around 8,000, something like that. 9,000. Sales per employee. So by employing these temporary businesses, you generate literally in 1 year $12,000. Isn't that really damn high? LTM. What's their business model? How does that work? That seems really damn high. Performance highlights. Sales from job placement services were higher than expected. The regional revitalization business increased 74% year on year. Despite the increase in selling administration expenses and ongoing investment in aggressive advertising and promotion, sales increased 28%. Sales. Okay, so I have a feeling that the sales is just how much the employees earned and how much they're paid. They're probably paid like this much, so they make the net difference. Our model for temporary staffing and job placement. Sales for employment placement services are calculated based on only gross profit, so compared to temporary staffing services. There's a tendency for amount of sales recorded to be low. Due to the growing needs of our clients, the number of people employed through job placement services is increasing. Since this is a fixed-term employment, many employees return for work for us after the employment period ends. In cumulative third quarter, job placement sales approximately 130 million yen. Job placement compared to temporary staffing. The amount of sales recorded will be lower. Staffing sales, job placement sales. So this is staffing and this is job placement. So both have increased. This increase around 50%, this increase like 5%. Okay, tourism HR business latest results. Sales are mainly calculated by number of employees times sales per employee plus job placement. While increasing the number of employees is an important KPI, we aim to achieve growth by extending the employment period, which makes sense, which contributes to increasing sales per employee. So sales is number of employed people. Sales per person is dispatch costs, working hours, and employment period. Working out, okay. Plus job introduction. Plus job introduction and others. Costs, mainly staff salaries, social insurance. Gross profit, 21.9%. So probably the dispatch cost is what gives them a lot of money. Like, that's high margin probably. Working hours, that's at like a predetermined rate. Employment period. S&A. Advertising investment. Employment recruitment. And this is last year. So last year S&A was lower, but maybe they're increasing their capacity to do this. Oh, I forgot to time myself. Okay, so it probably has been 15 minutes, but let's think about, okay, what do we want to accomplish in the next 15 minutes to quickly get through this company. Okay, full year they think they're gonna make 800 in operating profit. I would like to know what their enterprise value is. That's probably easy enough. Enterprise, okay, 500 million net income? 500, okay. So this is like 18, so 16 times P. And then what does their operating income look like? How much cash do they have? Quite a bit. Do they have, okay, we do have their, I think we do have their financial statement. Oh my god, half here. Do they have? Okay, I'm gonna base off this one. I can't be bothered to. I'm gonna take a shortcut and buffer code this. Because this is just too ass right now. Okay, 1.5. Call it like 6 then, around 6 billion enterprise value. 6 and looking to generate that much. That's pretty good. That's pretty good. And this is 16 times. And the question is, how much are they going to grow by? So it grew by 50%. What do they think in the next period they're going to grow by? That was in here, so it's going to grow by 14.6 billion, but it's only 2 billion now. So the sales just suddenly took a nosedive. I think that's the good thing about this is that with Japan's declining population, this does help in the future. Business partners, 4,600 facilities, number of employees per year, 9,320. 60% are between 25 and 44. Tourism HR, 117 billion yen. Okay, market size, industry issues. Tourism will grow in the medium long term, which I agree with. But then, accommodation industry, regional and urban resource market, 1.9 trillion. So they've tapped in like 6%, roughly 5%, 5 to 6%. Accommodation industry, human resource market, around 9,000. Tourism personnel dispatch. Labor shortages are becoming more serious. So shortage human resource, increased demand for human resource. Foreign visitor to Japan annually, double increase. Accommodation and food service industry, labor shortage. I don't know, that's 79%, that was 16. I think what that means is that they only have 80% of what they require, I think, so there's a 20% shortage. Increase in rooms, so they're going to be over 200,000 rooms and turnover, 150,000 people turnover annually. Number of sales is number of employed people, employed person, sales per person. Focus on acquiring talent and aiming for growth. Young talent, senior human resource, foreign. In the tourism industry, the growth engine of the Japanese economy, traveling spending in 2030 is expected to be expanding, Expanding the tourism market to 10 trillion. Japan domestic travel 22 trillion. Travel consumption by foreign visitors is 5.3 trillion. Foreign visitors to Japan. Travel consumption. Oh, to grow to 15. From 5 to 15. This is 22, so 18. Okay, so domestic travel expenditure is still going to be constant. Okay, the foreign traveling is going to increase by 10 trillion. Really? I thought it'd be higher than this. This might be a little bit outdated. Like, I feel like even currently in fiscal year 2025, this is a lot higher. Right? Because there's a little bit of over tourism in Japan, right? If that's true, then yeah. D2C specializing in non-tourist destinations tourism. Dive hotels. What do they mean by this? Number of registered users 46,000. Of these, 9,300 are employed throughout Japan. There are many repeat customers who work while traveling. Interesting. We aim to attract talent from all over Japan and match them with tourist facilities to help people. We have been in business for over 20 years and have built a database of tourism facilities and personnel. B2B. Okay, business model combining online and offline to increase number of employed people and extending work years. By digitally matching tourism facilities and personnel before they start work based on a database, mismatches can be reduced. By providing customer success to tourism facilities and personnel during their employment period, we aim to accompany them to the completion and extension of their employment period. Two million users to the resort. Compared to 300,000. I'm currently traveling around Japan while continuing to work part-time jobs. Search and found, apply for a job in Okinawa. Register for a dive. You can communicate via line, however, the benefits meeting with the person in charge, meet a reliable dive specialist. After that, you can repeat the dive. So, okay, general, specializing in tourist facilities, so you get to live in. Job description, living environment, surrounding area, dietary requirements, co-residence, conversion rate low. Risk of early retirement during the term, high. Employment period 2 to 3 months. Okay, so that's probably why the sales are 12,000 yen, because the employment period is for 2 to 3 months. That's why. So they're making around 4,000 a month. If that makes sense. unique human resource services specialize in tourism facilities, use technology to resolve these characteristics. TAM is 1.9 trillion. SAM, accommodation industry, regional. Oh, so regional and urban, so just regional. 10 trillion. Tourism personnel dispatch market, 470. Tourism personnel dispatch market, current market acquisition. So they own basically around 20 to 25% of the market share right now. And it can grow further. I see. Let me just think about this a little bit more deeply. Okay, market environment and growth potential. As the tourism industry makes a V-shaped recovery and grows rapidly, labor shortage due to population decline also accelerates. That makes sense. In addition, deliberately choosing non-regular employment, the number of workers who do this is on the rise. People want flexibility with work. That makes sense. Tourism personnel dispatch service demand continues to grow. It's expected that, with a view of the vast TAM, by acquiring SOM, we aim to increase our market share, aiming for stable growth. Regional human resource market. Urban and regional. Okay, I think this is the crux of our analysis. I'm going to spend a little bit more time thinking about this properly here. Okay, so let's say we're focusing mainly on regionals, okay? Regional is going to be where a majority of our opportunity lies in, because that's where it's going to be harder for people to find employees, right? So that's going to be the most addressable. The reason urban is going to be less, there's going to be less demand in urban is because in places like Osaka and Tokyo, people want to work in those places, right? So it's going to be easier for them to find employees that want to work there, right? So there's going to be less opportunity for Dive to make an impact. Okay. So the main impact, let's say the TAM for urban is, okay, they're saying the TAM for urban is like 1-to-1 match. So like, let's say the TAM for urban maxes out at 5%. So it could utilize some of this for 5%. I think it's still unlikely, because the thing is, these are contracts for 2 to 3 months, right? Why would a company want to hire someone for 2 to 3 months in their Tokyo establishment? You know, seems a little bit unlikely. Yeah, no, let's focus on Sam. Let me think about that a little bit more. Okay, I was thinking though, when I was looking at this company, is that it could be more than 2 to 3 months, right? There's no reason why it can't be like up to 6 months, right? Or 6 to 9 months, right? So what could happen for them to tap into the urban area is they offer longer term employment contracts for people who want to flexibly work in Tokyo, but I really don't think that that's a target market, a large target market. If there is, the percentage is going to be a lot lower. Somewhere in the vicinity of like 0 to 5%, if I were to make a really high margin of safety call on that. So out of the 1 trillion, 1 trillion additional, probably only anywhere between 0 to 500 billion is going to be the market size for that. So it's not going to be the full 1 trillion at the state. Okay, now in terms of the SAM, the human resource market in the regional, half of those are going to be full-time employment, right? So that leaves only half of it for part-time employment, and then out of the half of that part-time employment, we have to think how much of that is actually covered by the locals, right? Because they are going to hire locals, right? So let's say another half. So it's really only like 2.5 billion, I think, that's possible. So if we include the entire TAM, it's only 2.5 to 3 billion yen that they could tap into long term. Okay, Now they have 20% of their current market share, which means if they maintain 20% of their market share across this 3 billion, that is 600 million sales. 600 million. Let's say they underperform their market share by 50%. Let's say 300. So let's say they can grow to 300. What would that look like? Okay, what would that look like? Current operating income is kind of crap. But then there is operating leverage. So this is not the best way to look at this company. Where's my thing? Give me 1 sec, guys. 519 earlier, right? 519. Okay, let's think about this. Let's think about this real quick. Sales increase by 40%, operating profit increases by 10%. They're building out infrastructure, right? So currently this is 10% would be 1,400. They're at 6% next year. Currently they are at 7%. Huh. Yen. Wait, how come this doesn't make much sense? Sales here is 99. What is going on here? What is going on here? I'm not looking at this properly here. Am I looking at this properly right now? Jesus Christ. Fuck me. I'm gonna go back up and review. $10 billion sales. Right, but then you just said that you have a market cap of the market that you service is 130. What is going on? Oh, you're talking about employee sales. I think I get it now. Just let me give me a second to extrapolate here. Oh, okay, this is similar to casinos. How there's gross gaming revenue and then there's revenue from the company. Okay, so I think I understand what's going on. Let's go check. Oh, I think this, okay, I think this. Oh, okay, no, it's just, okay, same thing, we're looking at the same figures, it's just 117 is actually 11.7 billion, it's just like, it's translating billion from in kanji, okay. So I said 300, right? So revenue can increase to 300, okay, that's still the same thing. So it's 30 billion. So it can increase to 30 billion at 10%. So 30 billion on 3 would be 3 billion yen. So if it can go to 3 billion yen, okay, not bad. Not bad. Balance sheet. Yeah, if they can generate 3 billion yen of EBIT, and then this is how much they're valued at, which is like essentially 5, straight at 1 point something times. Okay, this requires a lot more due diligence, I feel. Definitely a lot more due diligence, and I don't have time right now to do that much, but it's definitely, let's put it in the B category for now. It's worth some additional time. Right. Part of me a little bit pissed off about the formatting and stuff, and not being able to find documents and the lack of data, which is making this a little bit more tough for me to figure out. Yeah, it's also important to figure out who are the other competitors in the space, and then how are they doing. Yeah, because they only have 20% of the market share, right? So, next. Okay, let's move on. Okay, Callus provides cloud-type services to detect and counter unauthorized access for corporations. Major clients are in the banking, security, communications, and gas industries. Security firm has a recurring revenue model with monthly subscription, offers services in 3 areas, namely login detection to respond to risks of unauthorized access, detection of unauthorized deposits or withdrawals, and detection of new account openings by impersonation scams under the name of Fraud Alert, established in 2015. Okay. Looks interesting. Low of 800 has doubled, more than doubled. Gone back up. Interesting. Oh yes, a profitable company. Thank you, thank you. Nothing with really thin ass margins. Oh, thank you, thank you. Any more data? Can we have more data? If we have more data, that'd be awesome too. Nope, not much data. Small companies, man. Small companies. 1.5 on this, so that's a 9 billion enterprise value. 9 on what? 9 on 400. Okay, that's pretty. It's like 25 times EBIT. So another market play, a market TAM play, I guess. Okay, we're gonna have to do our own calculations then, I guess. Callus, affection, information, stomach. What am I reading? Vinegar. I don't, what is this translation, bro? Okay, fraud alert, anti-phishing, account resell information, collaborative services. Okay. Okay, used by some pretty major corporations and mega banks. Very good. The idea of building a database of unauthorized access in Japan. Thanks to your support, our services have now been adopted by over 40 companies, mainly financial institutions, and we have achieved results capturing unauthorized access across industries. Good. Good. Liking what I see so far. We have first quarter stuff. Okay, let's do financial summary real quick. Alright guys, I'm gonna need a bathroom break, and also my throat is not feeling that well, so I'll be back, but give me like a, I wanna say, give me like a 20-minute break this time. I'll come back in 20 minutes, okay? Alright, I'll see you guys in a bit. I'll be right back. After this company, I'll take a request. I'll do a request this time. Alright, be right back. Talk to you guys in a bit. I think I actually need like 30 minutes, but yeah. I'll be back in 30 minutes. So let's see, what time is it? 9:29? Okay, let's say 10 p.m. Ta-da! Back. We are back. Okay, fraud alert. Let's take a look at this company. Apologies, guys. My throat is not feeling the best, so I have a hole in right now. But I might have to take some short water breaks just to, yeah. But I'll be talking at a lower volume. But I have my mic right next to my mouth right now, so should be fine. Just need to quickly translate. Okay, with the financial statements. Oh, nice IP. Looks interesting. Currently converting the investor presentation. Oh, we have 5 people back. That was fast. Before there was 1. 5 if you were back. And you guys are on time. Alright, so let's quickly take a look at this company. I like their margins. Could have promise here. Actually, their latest quarter is Q1, so I technically should look at that one instead. Oops. Okay, we got it. So let's get the share count. First was the share price. So 1640. Treasury shares. What's the cash? So no investment securities in this company. A little bit of debt. Really low net asset. Base. Any NCIs? No. 0 NCIs. Let's see here. Dividend. No dividend. Which is expected. This is a new company. Tangible. No intangibles. So 0. Okay, let's take a look at how they did in the fiscal year. Very well. What are they forecasting? Let's see here. Minor increase. Slight drop in income. So a lot of they are highly profitable, but then there is seems like there's a cap here. How are they going to continue growing? So how come growth isn't as high? Because these are very high multiples though. Let's take a look at their IP and see if we're going to figure that out. If you're just joining us, welcome. Oh, we have 100 viewers today. We have hit the 100 viewer mark. Currently have 5 viewers. If you're new to continuous compounding, welcome. We are on the 7th hour of streaming. Okay, so if you haven't contributed to chat, please tell me what you look forward to from continuous compounding and what country you're from. Also, if you haven't subscribed yet, please subscribe. Trying to hit 100 subscribers by the 13th. Today's already the 10th. I've only hit 36, so a portion of my goal. Actually, let's quickly take a look at how many subscribers we have. 340. Okay, so we've gained like 4 subscribers this stream. Not bad. So they combat online financial crimes. Co-creating information infrastructure, making the world a better place. Providing a platform for sharing information on fraudulent users. Okay. So company A blacklists sharing platform, blacklist company B sharing platform. So prevents the same perpetrators from scamming other companies. Fraud alert is provided by the National Police Agency. It's confirmed that this falls under part of the implementation of Article B of the Act of Prevention of Transfer of Criminal Proceeds, which stipulates reporting of suspicious transactions. Therefore, as this falls under Article 27, Personal Information Protection Act, companies subject to the Criminal Proceedings Act can share with their customers without opting in. Companies not subject to the Criminal Proceedings Act can provide third-party information to our company by consenting or notifying us. For your results. Annual recurring revenues, 12.6 million. So when I say billion yen, I think it's potentially a different number. I have to put this side by side with their other IP. Over here, so we can sanity check any figures here. So we're in slide 7. So when this is actually 1.2 billion, and then annual ARR is 1.26. ARR growth rate 35%, operating profit. Yeah, it's not exactly true. Yeah, this is like 410 million. Number of contract companies 47. Average revenue per user. So there's 47 companies. Every user generates so it's 2.2 million yen per month times 12 months. So 10 months would be 22 million. 22 million and then 26. So that's around 26. So that would be 2.6 billion yen. 2.6 billion yen per year. But then, hold on a second here. Sorry, one sec. Let me see if I can back this up. Alright, no, just 2.2 million, so it should be that. So annually, this is monthly, this is annual. Oh, you guys probably can see it a little bit small. Let me zoom in here. Okay, let me open a new sheet here. So there's 47 companies. Trying to just make sure this is actually accurate. Yeah, it's accurate. 1.2 billion. Yeah. So yeah, that is correct. Sales growth rate 23%. Monthly MRR, number of contract activities increase. New contracts tend to start small, and ARPU remain almost flat. Contract balance also increased by 50% compared to the previous fiscal year. So they added 8 companies from last year. Upselling is strong, in particular the number of accounts and user actions. The increase is largely due to the increase in price increases proceeding largely as planned. They acquired 10 companies, 2 of them canceled, 7 banks, 2 security companies, 1 credit company, and 2 banks canceled. Really curious who the competitors are in this space. Yesterday I remember looking at a security company. Existing upsells also are low-cost new customers. Increase ARPU for existing customers by upselling at contract renewal time in order to further increase ARPU. The challenge is to achieve cross-selling. Add contract balance to sales department KPIs. Plan your approach to customers. Get a better understanding of your sales plan. Monthly recurring revenue. Cross-selling was not achieved and growth was small. 20% increase. 2 new banks were added, bringing the net increase to 8 for the full year. The number of new users is increasing, but ARPU is decreasing due to a small start. ARPU is increasing for existing customers due to upselling. So they start them off small, and then they grow. But this is so low that's a little bit concerning to me. Because existing ARPU for existing customers is 2670, but then before they were able to add customers at, pretty high rate. Okay. This has to be a growth play though, that's the thing, like, these multiples don't inspire much confidence, right? This is the full year forecast. that low? Are they investing in R&D? The high amount of contracts acquired in Q1 was due to concentration of contract renewals. Well, they only have 47 clients right now, so that's bound to happen. I want to know what they think the market size is. So let's churn rate. Actually, let's look at that. The value of the database for fraudulent user information and operational support by customer success continue to result in low churn rates, but no churn in Q4. Calculations were made by changing the target period from 3 months to 12 months. But they only have 47 clients, so when 2 clients leave, isn't that already like a pretty high churn rate? So how is it possible they have 0.2 and 0.3? That doesn't really make much sense. Gross or revenue churn rate? Oh, revenue churn rate. Okay, that could be a different calculation because some clients, if they're new, have like 667. Whereas an average contract right now is like 26 million, right? Yeah. Well, number of cases of account suspension and forced closure due to fraudulent cases. 110,000 accounts. Wow. According to the Japanese Banker Association, the number of accounts suspended or forcibly closed by financial institutions after fraudulent use was discovered was 110,000, exceeding 100,000 for the first time since the survey began in fiscal year 2003. In a survey conducted from April to June fiscal 2012, the number was 30,000, on pace to exceed the previous year. Wow. So fraudsters are doing a bad job of penetrating accounts or starting new accounts than it is for them to catch them. Okay, so something like this is actually quite necessary. The Financial Services Agency will soon issue a request to financial institutions requesting that they establish and strengthen systems for monitoring and detecting transactions suspected to be fraudulent. Implement measures to prevent fraudulent use, such as freezing accounts and temporarily suspending transactions, and promptly share information about fraudulent accounts with the police. Demand for fraud alert is expected to increase. Wow. That is impressive. What is the amount of damage? So the amount 500 billion yen. Let me just double check this. So this is slide 26. 50 billion yen. 50 billion yen correlates to around 500 million CAD. Phishing damage regarding internet banking. Number of fraudulent remittance losses is increasing sharply. Wow, that's a lot. It's probably better to invest in these fraudsters than it is to this company. Yeah, they're doing a great job. Look at that growth, man. They 5x their frauds. Oh my gosh. Phishing damage. So that's 6 billion of phishing damage. It's crazy. Oh no, that's sorry. I read that wrong. So that's 5,578 fraudulent transfers. The damage amount is 87.3. So eight. Sorry, that's like 8.7 billion yen. 8.7 billion yen correlates to around 10 million in damage. Like 8.7 million CAD of damage. Yeah, assuming 1 to 100 conversion rate, which isn't exactly accurate. Social media investment in romance fraud. Romance fraud, jeez, people. A lot of Sims out there. Social media investment fraud. Yeah, so fraudsters are getting a lot smarter. In this situation, in order to keep up with the rapid changes and protect the public from the damage caused by fraud, it is essential that the public and private sectors work together to take even stronger measures quickly and appropriately. The existing plan will be progressively eliminated and comprehensive measures will be put together targeting special fraud. So what's this company worth again? $10 billion. 10 billion. 100 mil. Special fraud is 50 billion. The company's worth 10 billion. The thing is, service that uses information held by electricity suppliers to prevent money laundering and actively verify transactions in order to stop the inflow of funds. Fraudulent account opening, prevention services, opening an account application, specify business operator, identify verification, specific operators, sharing and matching results, fraud alert. And when opening a new account, a service to prevent fraud using vacant house addresses. By comparing the information held by the general electricity transmission and distribution company with the end user's data information, a service that determines whether someone has been residing in an address continuously or that they have moved out. Okay, that's pretty smart. Because if there's electricity at the actual address, that means no one's living there, right? That's fair. Specific business operators, customer information sharing, sharing and matching results, general power transmission distribution. I wonder how much they have to pay the electricity, or whether that communication is kind of mandated by the government, maybe. So they had 10 appearances, seminar presentations. By sharing our expertise and experience, we will increase understanding of the importance of monitoring billing relationships with supervisory authorities and gain their trust, thereby raising awareness of callous. So they had presentations with financial services, digital ad agencies, law firms, bar association, private presentations, Nikkei Financial. Okay. Feels like the company has does have a pretty large growth run rate, but I think this is a little bit too difficult. at this juncture to figure out. If we limit it to existing customer industries, financial institutions, the upside is large. We're also targeting new markets. A monitoring system is required by 2028 when the fifth FATF review will be held. Okay, so banks, they've only 25 out of 122 lines. So there's 122 potential banks, is that what they're saying? 39. So, let's see. So either that means they've only targeted 25 out of the 122 potential establishments, financial institutions, so they could target in 2026 50% of that, so target 60. Security companies. So I think what that means is that they've already reached out to around half these companies. Shinkin Bank, because they haven't had any other finance companies, they haven't done any credit card companies, e-commerce sites, 4.55 million stores. So basically this is the untapped market, right? They haven't fully penetrated or reached out to enough companies, so they have a lot of room to grow. So this is just a grow play. So I'm gonna quickly move on from this because whether it's actually worthwhile is harder to kind of ascertain. But I'd give it they're highly profitable, which I like. They grow enough. I mean, 10 billion on a lot of potential damage. 10 billion. I guess they seem undervalued. 154A. 153A, so. Sure, I'll give it that. $155A. Developer of digital transformation related system comprehensively supports digital transformation for corporate clients, covering from consultation by making proactive proposals on business issues to development. Known for agile development methods characterized by rapid development and improvement without the need for defining detailed requirements. Focuses on supporting AWS introduction. Main clients are major corporate groups. Also develops white box, a platform service that can be used to place and receive orders between first-tier contractors registered as members and outsources such as system development firms and freelancers. Low margins. Quickly take a look. 155A. You know, one thing I could consider doing later on is just ignoring all these ones that are just have the A next to them and look at like bigger tickers potentially would be more fruitful. Low margin, not much history of revenues. This is be very speculative. So these are just okay. I'm gonna make a thing today where it's like if it is a market play, then I'm gonna have to just not look into it because I just don't have enough information or know-how about it for it to be fruitful, right? So we're just gonna ignore it. 155. That would probably speed things up. 156A conducts business in marketing and communication sector as a group of professionals who support the growth of client brands. The core business PR consulting services, where teams are formed for each project and provide support from strategy design to implementation. And a quasi-core business is digital marketing, also fostering the PR platform. 56A, I think it's going to be very similar, potentially. Yeah, so also a very new company. Oh, not bad. PR business. SG&A, very high SG&A. The income, enterprise value, 7.4 billion yen, 6.6. What's the income statement look like? What did they do? PR consulting. Fostering a PR platform business solving PR challenges for small and medium-sized startups. Aims to grow by strengthening the supply system through accelerated recruitment, making quasi-business to real core business and strategic M&As. I mean, not a lot I can really build off of. Again, it's probably a market thing. So, again, we're gonna skip this. Looks not bad though. Green Monster offers app-based hands-on investment learning support and financial planning FP services. Apps include Kabutatsu for an introduction to stock investment, Toshika for simulating long-term installment investment plan, and FX Navi for FX demo trading. Yikes, the FP business provides financial education, life planning proposals, and other services. 10% margin, 9%, very low. I'm just gonna skip these ones because it's just too limited amount of data to go off of. Okay, NPEX. The leading specialized upstream developer and producer of crude oil and natural gas in Japan, origin in Indonesia Petroleum affiliated with then Japan National Oil Corporation. The Japanese government is the largest shareholder and holds the golden shares with veto power on important resolutions. Every president has been from the Ministry of Economy, Trade, and Industry. After the management integration of NPEX and Teikoku Oil in 2006, the company merged with these subsidiaries, has participated in many development and production projects, mainly in Asia, Oceania, and operated in the Ichthys LNG project in Australia. The total operating cost of $40 billion. Wow, looks like a big company. 1605. Let's take a look. Okay, 2 trillion yen. 2.5 trillion. Oil, gas, and consumables. Okay. Okay, EV/EBIT 3 times. Wow, pretty cheap. But 9 times forward earnings though. How much cash they have? Ooh, a lot of debt. But even so, EV/EBIT is pretty low. 1 trillion yen in debt. Net debt over here is 750, so they did pay down some debt, which is good. Pretty good margins. Something% EBIT margins. So they probably have to pay some debt expense for it to be this low. RIC. So very capital intensive. Good income statement. $2.2 gross profit. 1 trillion yen operating income. Hello, Hades Kwame. It's your first time today tuning in, right? Yeah. Welcome. Yes, I'm at 7.5 hours so far. I said I will do 8 hours. I'm doing 8 hours, including breaks. So I'm gonna do it. But yeah, we're nearing the tail end of my energy rate already. Yeah. But thanks for tuning in. Interest expense, interest and investment income is exceeding that of interest expense. 1.3 million. Oh wow, that's a huge ass income tax expense. So even though EBT is 1,300 trillion, 1.3 trillion, they're getting taxed up the asshole here. So probably has to do with their industry. Is it Nitetsu? I don't think so. Did they own Nitetsu? They do sale of oil, natural gas, and other mineral resources in Japan and internationally. Companies involved in investing and lending to the companies engaged in mineral resource business, transport natural gas, as well as operates, maintains pipelines. I did cover Nitetsu today though. Yeah. Parent company Nitetsu was on the floor beneath us at my old job. Nice. Must be their corporate headquarters then. Okay, you have a model. Impacts athlete employees. That's funny. Integrated report 2024. Let's take a look. One thing I want to figure out is how come their tax rate is so high. Okay, Inpex is reportedly reporting a notably high effective tax rate of 65%. Why is Inpex tax rate so high? Japan's statutory and local tax rate hovers around 23 to 30%. On top of that, there are local corporate tax rates, enterprise tax, which includes special national and business tax components, especially nuanced for energy firms, inhabitant tax, and other service taxes. When combined, these can push the statutory tax above 30% and closer to 32 to 39%. Sector specific impacts as a major energy and extraction company faces additional special business taxes not applied to most companies. These relate to capital base, value added base, and scale of operation. The special corporate business tax and energy sector enterprise tax surcharges can elevate the effective tax. Non-deductible items, profit mix, and transfer pricing effects. Large incomes from international operations, joint ventures, lifted LNG, equity accounted profits, and limited offset by losses can distort effective taxation. Some revenues and profits are structured under international transfer pricing rules, some taxable as Japanese source income through Japanese trading in finance entities. Japanese corporate and local taxes, sector taxes. Seems a little. Yeah, seems. Damn, 100%, 80%, 60 something. Wow, just historically very damn high. Very high. So, because our tax rate is so high, I think EV/EBIT becomes less important and is more of a PE ratio that we care about. So 6 times earnings, 7 times earning. Current market cap is likely correct. So on the income statement, we can look at it real quick. Excuse me, so 427. So 6 times. 6 times current PE, but next 12 months is 9 times. So are you gonna make, let's see here, that's 9 times of this is less than 300, so that's not looking very good. Okay, drop in sales, drop in EBIT, so that means a drop in EPS too, right? 260, yeah. Net debt is declining, so they're paying off debt. Lower interest expense. Cash flow still 300. CapEx matches D&A, roughly. Nine to 10 analysts agree with this. Yeah, I don't see much of what the gap is, right? Do they have high dividends? Let's take a 4.3%. I guess if you want some oil and gas exposure, Inpex doesn't look too expensive. Yeah. I'm gonna put this in the too hard pile for me. Okay, next. 168. The two cores are the senior and real estate business. The senior business focuses on management of nursing care inclusive homes for the elderly, mainly in the Tokyo metropolitan area. Strong in improving operational efficiency and productivity through eGov-Link and IoT ICT platform, developed jointly with vendors and used for securing manpower by appealing a pleasant work environment, as well as improving services leveraging unoccupied time. Also provides daycare and short stay services. The real estate business centers on in-house development of land and buildings for nursing care inclusive homes for the elderly, leveraging know-how and operation of nursing care-related facilities and personal connections, in addition to revitalization of real estate, including aged housing complexes. Okay, so we can just take a look. Doesn't look too interesting to me though. Oh wow, price has gone up a lot. 1,600, increase over 50%. Pretty simple business model. Don't like those margins. Don't like those margins. But what's the multiple? So, okay, hold on. 3%. Paying 10 times that. What is their growth? Quarterly. LTM, please. 1.5. 1.5. Cash is slightly lower than debt. So 1.5 on top of that. So that's 10.8, 10.9. 10.9 on 1.5. But not bad. It's like 6-7 times EV, but question is that sustainable? I think nursing care is pretty stable. Should be. I think at the valuation that it was at previously, it was way too cheap. I think probably that is what that was. Because it increased 50% from previous levels, and it's trading at 6 or 7 times. It means it was valued at like 4 to 5 times, which is probably a little too cheap for the company. But now is it fairly valued? What's the income here? 0.5, 20 times. Yeah, I don't really want to focus on companies like this, so we'll just put it in don't bother. Next. 165A SRI Rose Hifumi. The core operating subsidiary Raise Computer Works was established in 2003. A group firm of SBI Holdings engages in the investment trust advisory business, offering investment trust management and investment advisory services. Investment trust service establishes, manages, and sells investment trusts under Hifumi brand. Direct sales are supplemented by indirect sales for banks and security firms. The investment advisory service manages domestic corporate pension and overseas sovereign wealth funds on consignment. Very new company. I'm going to skip this. Oh man, so many oil and gas stuff. Okay, 162 here. Big company. Look at those sales. Japan Petroleum Exploration. A firm specializing in crude oil and natural gas development. Japanese government is its largest shareholder, with an about 36% stake. Originally established as a government-owned company under national policy in 1955. Once was integrated into the Japanese Petroleum Development Corporation. Made a new start through a spin-off. It has its own pipeline network and operates oil and gas fields in Hokkaido as well as Akita and Niigata prefectures, promoting a shift to overseas markets, entrusted with the development of the Garif oil field in Iraq, jointly with a Malaysian state-owned oil firm, abandoned the commercialization of an LNG project in Canada, led by the Malaysian firm in 2017, commenced the operations of Fukushima natural gas power plant, using natural gas regasified as its own LNG terminal. Exploration and production, 27%. Infrastructure utility, 53%. Other. Should I just skip the entire energy section? Because I feel like this is not my bread and butter. I can't really add much value into this analysis. I'll probably skip it. So, okay. 1662. KNO energy. 1663. Gas development, yeah. Tasuki Holdings, which sold, yeah. Glad we're on the same boat, Haley. I'm not alone. Which sold entire buildings of asset managed condominiums in Tokyo metropolitan area, mainly the 23 wards, and Tasuki, which was once a subsidiary of Tatemono, but became independent. Tasuki specializes in properties within a 5-minute walk from stations in Tokyo's 23 wards and sells entire buildings of low-rise condominiums worth 203 million yen to the wealthy to reduce inheritance tax burdens. Sales are outsourced, strong in developing competitive products such as properties standardly equipped with optical fiber networks and IoT home appliances. Tatemono has many properties in favorable locations, and its liquidation business selling land for development to other developers grows as well. Also develops hotel and logistical facilities. Specializes in land development without owning a sales department. Okay, so they outsource the sales part. I mean, I'll take a look. Still a new-ish company. $667. It's not enough information for me to go off of. Yeah, I'm gonna admit it's too little. I'm just going to skip anything that is just 2 years of data. I'm just not going to do that. This company competes with LC Science, so I'm going to skip. Founded in 1986, a pioneer in Japan's ESCO energy-saving business. Expansion of operations and general facility management and others have ended by selling the business in May 2009. The current mainstays are the energy-saving related business and renewable energy business. Improper accountings, including fictitious sales for a long period, were revealed, making the company's stock designated as secured on alert. Okay, I am not going to touch that then. Former fraud? Fuck that. Okay, 1712. So 1711. Former fraud. We don't touch that. 1688. Okay. Oh no, 1711, sorry. Wrong company. Next, Daisuke Eco Solution. Soil contamination survey and contaminated soil remediation business. Major industrial waste treatment firm. Contaminated soil treatment business has strengthened its comprehensive structure covering from surveys to treatment process. Focuses on the cultivation of demand in the Kansai region in Tokyo. Its processing capacity at recycling centers in Yokohama, Nagoya, Gifu, and Osaka stand at over 1 million tons a year. Okay, we can look into this. 1712. What the fuck? Oh, okay. Okay, let's see. 682 went up to 2K, dropped to 800, rose up to that. Recently went down to a G. 900-ish. Okay. Eco processing. So stayed flat, and then has been able to increase it. Okay, sales growth 47%. And operating income doubled. We don't know if this is one time or not. That is yet to be determined. How's LTM been? So good Q4 here. Okay, it has dropped. Dropped by 6 billion. So this dropped. Yes, roughly a quarter, and then this dropped 2.8700, or roughly a quarter too. Times 4P. How much cash do they have? More debt than cash. So looking at these type of companies don't really spark joy in me, so I'm just gonna say to put this in the too hard pile. Yeah. 1712. I don't mean to get rid of so many, but like I kind of have to. Daiichi Cutter Kogyo mainly engages in the cutting. So here's like just a thought process before I continue. It's like this is how I also approach Circle of Competence, in that I want the market to incentivize me to learn. What do I mean by this? So if I see a really good like net opportunity, or a stock that's just really undervalued with a lot of cash on its balance sheet, right, and has a unique business model and it's somehow growing, right, that's the market screaming at me, hey, learn about this company, right? Which is why I don't really look at fairly valued stocks, all right, or stocks that, you know, trade at you know, like that seem like they're fairly valued, because I'm not getting paid to learn. I want to be paid to learn. Of course, you do need to, there's merit in learning even when the market doesn't give you the opportunity, because, you know, let's say a sector does get very cheap, right? Then you have to be prepared for it when that happens, of course. But my approach has always been, there are companies that can be within my circle of competence, and then if they're also very cheap, then I look at them, right? And that tends to be like consumer companies for me, because all consumer companies I can kind of wrap my head around how that engagement happens, because I can relate my own experience as a consumer to that product and that experience, or I can look on YouTube and get an understanding, right? But like mining companies, energy companies, yeah. I also find those businesses a little boring. They don't really like turn my gears very much, but there is definitely merit in learning about them, you know. Yeah. Tons of sleepy net stocks in JP though. Just buy and pray for a buyout or a divvy increase. Yeah, or a better corporate governance, essentially. Yeah. Yeah. Haley's Sonnet says, underlying business matters, but honestly, you're net positive for 20 years or whatever. Almost don't even have to look at the business too closely. So it depends if you want to take a systematic approach, right? So theory-based wise, like anyone who's read like the net investor type book, I forgot who wrote that, someone wrote it. And basically, if you take the net approach, right, you could generate anywhere between like long run 15 to 25%, you know, just systematically buying nets and you know letting them do their things, and then holding each position for roughly a year or two, I think is the best holding period, is what the book said, something around that time period. But for me, like I want to actually become better as an investor. Like I feel like that edge, yes, there's that edge, right? Like you can do that and generate, I mean, it's a good return. 15-20% is really good. But um, my goal at this stage of my life is to truly understand how different businesses work, right? Literally understanding the business economics, right? Because when I actually learn about how a business works, I can take that business model and apply it and kind of extrapolate how other businesses will work, right? And I feel like my edge is way stronger, right? And that's how I'm able to get some conviction in some positions that I have, right? So for example, like I'm not trying to like, I could be just lucky, right? Just keeping this in mind with a grain of salt, and that, that's why like my recent pitches on like round one, glory, and whatever, like those have worked well, right? It's because I truly understand the business model. So when they tanked in April, like I was, I won't say which position. There's one position that I had 50% of my portfolio in, right? So talk about concentration, right? But then you can't do that if you follow a systematic net approach, right? You're gonna be very diversified, right? You're not gonna know which one's a home run, right? So then you're gonna just diversify like into 20, 30, I think the net strategy piece, some people even do like 50 names, right? Just for that diversification, right? And to really lower variance, right? Um, yeah, but variance is your friend when the market overreacts and you know exactly what the business is. So that requires a lot of diligence, due diligence, and truly understanding businesses, right? And that's the phase where I'm at currently with how I approach investing. Is I'm in it right now to learn, right? If I suddenly hit the lotto and I win like 40-50 million dollars, then sure, I'll put 10 million into a very systematic approach that generates 15-20%, so that I don't have to like rack my brain up, right? So there's some merit in that. I might get too gun shy with $50 million, right? To put half my net worth into one single position. So yeah, but I'm not managing nearly that much capital for myself. So okay, going back to this company, like Daiichi Cutter Kogyo mainly engages in yeah, and I have nothing against people who do the net strategy, right? Like it's to each like for their own objective, right? If their goal is just 15-20%, 10-20%, let's say, which is very respectable, right? Like they find a strategy that works and they're going with it, like perfectly fine, right? But if you think about the long-term goal, and if your goal is to generate really outsized returns and really, really just make your mark, then in terms of skill set, in terms of building up your knowledge base, I think it's much more worthwhile for me personally, um, to really dive into businesses and really understand the nitty-gritty of how it works. Yeah, which is why I like consumer companies, because I can really put myself in the mindset of a consumer. But I do need to expand my circle of competence. I do feel like there's something to be said about businesses that replace human labor, right? Like AI and that kind of stuff. So I do feel like I do need to stay above a curve on certain technologies. I would say that. Yeah. Currently over concentrated and slightly bag holding a single position. Get it about being gun shy too. Yeah. Yeah. So in terms of bag holding, um, my thought process is that um, yeah, again, this is the Warren Buffett quote, right? Like the stock doesn't know you owe it. Sorry, the stock doesn't know that you own it, right? And And how I basically go about that is, okay, so Francois Rochon, he has this, every year he does like an annual letter, right? And then he points out, oh, what is his gold idea? What's his top idea? What's his like second best idea? What's his third best idea? And he also does the reverse in terms of his mistakes. So what is gold in terms of his biggest mistake? I don't know if he does the second or third biggest mistake. I'm not really, I can't remember exactly. Right, but he had a quote that I read that was very useful. It said, if you liquidated your entire portfolio and started your portfolio from scratch, what would be the sizing for that stock? Yeah. So that's how I would approach it, right? So if you're bag holding right now, right, and let's say that position is 25%, right, and you want it to work, right? Ask yourself, if you liquidated your entire portfolio right now, what would the actual realistic position size be for this stock? Right, and and I think that's a much better approach. And I've done that practice myself. I have hit the sold button. I purposely, so I have this rule though. I have this rule which allows me to not bag hold too much, and that if any position drops 20%, I just assume that I made a mistake. I just assume I made a mistake and I just sell it. I don't look back. I just sell it. I take the loss. I take the L, because I know that emotionally, when I have a big negative position in a portfolio, it just mentally drains me. And I've really taken the idea of watering your flowers, things that are growing, that are green, to the next level. Like I've really embraced that idea. And so if you look at my portfolio, which I won't be showing you, literally all of my big positions are all green. Larger positions are all green. And all of my smallest positions are the most red. Right? So it's green on top, red on the bottom. And it looks very nice. I like the way that looks. So emotionally, it is an advantage. I remember someone, a poker player called Annie Duke, she wrote a book and analyzed the emotional psychology in terms of like portfolio management. And when people have a lot of negatives, they tend to be way stickier because they want to be right. Right? This is a little bit of an ego thing, right? When you have a negative position, it's like, oh, I want that negative position. Like selling means admitting that you were wrong, right? So, yeah. But again, the stock doesn't know you own it, and then what would the sizing be if you were to start from scratch, right? And oftentimes when you answer those two questions very honestly, you would realize that that the position sizing is too large. Yeah. Okay, so Daiichi mainly engages in the cutting and perforating works of asphalt paved roads, concrete structures, and others using industrial diamond edge cutting machines. Began as a sole proprietorship contractor of horizontal surface cutting works in Kanagawa Prefecture. Entered into the building maintenance work business in 2009, the reuse and recycling business 2012, and intermediate treatment of sludge in 2014. Okay, so stable sales. No problem. Just like I wouldn't even call this wisdom. I'm just sharing what I think, like my ideas. Nothing I say is right. I don't think that I'm at an age where I have that much wisdom yet. I'm still learning. So yeah, still take everything I say with a grain of salt. Yeah. Okay, let me just take a look at this company, 1716. So if there's technical analysis, this company's on an uptrend. Go all in, got it. Yeah. Do the inverse Allen Zoo, right? Do the inverse Allen, right? Not the inverse Kramer. Do the inverse Allen. Yeah. I'm gonna get a little bit of water. I'm boiling it, so gonna come back to that. Trade has 1600. What's the 1 year? Yeah, it dipped in April. Okay, re-dipped back to April. What are the profitability like? Not bad. Not great, but not bad. Annual. 13 EBIT margins have dropped. The income margin has increased, so they probably have SG&A margins have also increased. So they probably have some sort of cost. Maybe they lost some money in investment securities in one period. Let's see. Or they have interest expense. So what's their enterprise value here? Nope, they have a lot of cash. So it can't be that. Let's double check. Recent period. Nope, a lot of cash. So 16, 13, 14, pretty volatile, but recently it's gone back up to 20. Operating income also fluctuates. Interest expense, income tax, lower income tax. What's the effective tax right here? Around the same. Let's call it 2 billion. 36 PE forward. Was that possible? How is that possible? What are you smoking? 2. I mean, yeah, they have a lot of, like 5 billion. Like, essentially 5 billion on 2.2 billion. So like 2.5 times EV EBITDA. Seems pretty damn cheap. RIC? Okay, worth looking into. To read this, engages in the construction, civil engineering activities in Japan. Company offers flat sawing, core drilling, wall and wire sawing, grooving, various dry cutting and drilling, various metal cutting, concrete chipping, concrete surface treatment, metal cutting, and plant equipment cleaning. Decontamination services. Engages in the repair of bridge, port construction, dam-related construction, renewal work, demolition work. Okay, well, just take a look. Looks kind of cheap. Let's see, 14 billion, 140. Are there any analyst coverage? Because I don't know why it's 37 PE forward. Doesn't really make more sense. Doesn't seem like the right calculation to me. Okay, D1 Cutter. Oh, I like that website. This website looks dope. Oh, it's a very well designed website. Protecting the safety of social infrastructure at all times, even in everyday life. I have to go to 33% for this website to look proper. Okay, investors. Okay, water is boiled. I'm gonna grab it real quick. Finally, a company with a little bit more promise. Let's see. Notice regarding the end of the lawsuit. Good. Oh, they have English site. Nice. Okay. I hope you guys noticed what I noticed there. I definitely noticed something there. Am I able to control how this thing moves? No? Okay, we're just gonna look one more time. Not bad. Not bad. Okay. Moving on. Quarterly report. Securities report. Okay, that's not in English at all, but okay. Quarterly results. Oh, was the last time they did this in... Oh, okay. Last time they did English results was 23. Deep value confirmed. Jesus Christ. That's a stretch. Yeah, I'm about to fly to Japan, you know, to find my the love of my life. Probably paid actresses, potentially. Okay, so they don't have anything recent, so that sucks. So we'll have to use just Japanese filings. Semi-annual report. It's okay, we can use that. Okay, gonna download that. 1716 FS Q3 the year 2024. An IP. Financial results reporting. They don't have. So okay. Oh, they don't have that. Okay, so they get. I guess they don't have Q3. That's okay. That's okay. Okay, I'm gonna download both these filings and then I will convert. Haley's comment, are your kids asleep now? What time is it over where you're at? Okay, so we have IP, we just have to convert one more document. $3:30 AM or PM? If it's PM, then it's a nap. Ah, so they're napping. Got home from school and napping, probably. Okay, so let's do this one. Which one was this one? Oh, That's just a random document. That's okay. I believe this is 1716, correct? Yes. So PM. I see. Oh, I'm gonna quickly take a look at my own portfolio, see how I did today. I've been so busy working, I haven't had a chance to like. Hadn't had a chance to look at my portfolio today. Our portfolio is up a little today. Very tiny bit. Okay. Daiichi Cutter, Kogyo, 176 slash 423. Share price. Let's just use the Yahoo Finance one because that one is 1287. Excuse me. $12 million troops. 0.730427. Market cap 14.5 billion. Cash. Wow. Wow, wow, wow. Material stock. I think that means inventory. Tangible fixed assets, 6 billion. Intangibles, very little intangibles. Okay, we have some investment securities. Okay, not a lot of short-term debt, that's fine. Long-term debt. We have lease obligations, so we'll include that. I don't include lease liabilities in my calculation of EV, by the way, because sometimes these companies have payments for rent in their income statement, so that means you don't have to include it. Book value. Nice, 0.77 times. NCI, very low balancing. Good. Very nice. Very, very nice. Okay. So this company looks pretty good so far. 43.1%. Low intangible balance. Okay, current liabilities. Oops. Total liabilities. Oh, okay. We need the annual. We need the. Okay, well, we can insert what the current forecast is first. No change in forecast, which is cool. incredibly cheap. Okay. I had to find last year's stuff real quick. Okay. Third quarter, semi-period, second quarter, interim. Okay, we'll just fill this in from here. Okay, slight decline. Oh, I should convert this. Quickly convert, give me a second. Same amortization of goodwill. Okay, next investing activities. Not a lot of expenditures for intangibles, which is expected given their intangible balance. Pretty cheap. Pretty cheap. What's something? What would be forecast? I mean, there should be some type of analyst coverage, I think. Oh no, there's none. There are none. Okay. Well, let's do some estimation. Well, actually, let's take a look at Koyfin real quick. What has their historical cash flow been? Because their income statement, their revenues haven't increased substantially over the years. Oh no, actually it has. The last 4 years has been quite stable. DNA has increased. DNA has increased. CapEx? Oh, okay, so that appeared to increase CapEx, that's why. Interesting. Interesting. Why would they have to spend that much on CapEx? See, so that points to something else, right? That could be a scenario where they have to spend large CapEx in order to be competitive, right? So such a scenario, that would be kind of shitty. What's the free cash flow? So if we look at this, some good years, some bad years, 2.4, 3.8, 4, 5.3, 6.2, sorry, 5.3, that'd be 7.2. 7.2, 8.4. 8.4 in 1, 2, 3, 4, 5, 6, 6 years? 7 years. 8.4. 1.3 billion free cash flow per year on average. So this is a little bit. How is capex that low? But this one's stated so. Oh no, this is right. Period of massive capex. Interesting. What's balance sheet look like? What I'm trying to look at basically right now is figuring out where do most of their capex go. Building and structures, machinery and vehicles, 4.8 to 5.3. Accumulated depreciation. So I think most of it is from machinery and vehicles. Because if they have increased demand for the use of machinery vehicles, they have to invest in it. Tools, equipment, land. I don't think land is going to be increasing substantially. Yeah, machinery and vehicles is probably the big one. Machinery, equipment, vehicles, yeah. That's probably the majority of where that goes. But they had a period of pretty high investment. I'm not really sure what. Okay, I'm gonna just average it. So let's say this is a new normal now. Okay, so this is 2.9, 3.8, 4.6, 5.5. 5.5 over 1, 2, 3, 4, 5. 5 years. So 1.1. How's depreciation trended? Okay, 7. How can depreciation just go up to that level? How's that possible? Like, yeah, it should have gone up, but like, amortization of goodwill is even a portion of it, so. How do you spend this much and then depreciation just gradually increases? That's so strange. Unless this is like a 7-year lifespan, maybe. Not sure. I'm gonna do 800 just to be. This one doesn't matter. That doesn't matter too much. Still pretty cheap. So, do they do any buybacks? Because I see that they have, okay, good RIC, good return on all operating assets, 3% div yield, less than 1 times price of book. What has the share price been? On a decline. Are they buying back shares? Do we know that or not? So I would need to look at their IP. Open up IP. I have too many tabs open. Okay, let's see. Is this their Q3? Oh, this is the Q3 one. Okay, let's take a look. Let me look at buyback because I want to look into that. Pursue an optimal cap structure to ensure continuous ROE of 10% or more. We do this through buybacks if surplus funds are generated. One comment on buybacks. Okay, so corporate governance. Okay, let's read through this. Further strengthening competitive advantage. I don't know what that is though. So let's try to figure that out. In order to achieve long-term business growth, in addition to stable growth from our existing business, we will promote the expansion of existing businesses and ventures into new fields. And we'll make active investments for this purpose during the period. Initial plan for reuse and recycling business. Expansion of existing business and taking on new challenges. Existing business stable growth. What is that percentage? What is that operating profit margin? So they see opportunity to expand to 17%. Really? That ambitious? I mean, I don't know if that's possible, but they grow to how much in sales? So they're at 20. So they want to grow to, oh, in 2036, in 9 years, they want to grow to around 50 billion in sales. 17% margin? I don't know if that's possible. I mean, if that is possible, then this company is very cheap. 10% operating profit margin, group profit 24.5, group sales for fiscal year June 2027. Hmm. 24.5 billion. Okay, so that means it's 2.45. I mean, that is this. I mean, 30. What are you kind of doing there? Wait, hold on. But this is, oh wait, this is converted. Sorry, so this is actually 2.45, guys. Just move the decimal place one spot to the left. Promote active investment of 8.5 billion yen over 3 years to achieve long-term targets. Is this 8.5 or is it 850 million? Two very important distinctions. Let me just take a look, double check. Okay, so this is their H2. Issued in February. Okay, we don't know. Okay, 9. Yep, 85 billion, yeah. Oh, this is 8.5 billion. This is right. Yes, so in the sentence, that's correct. They're gonna invest that much in 3 years, wow. that mean the market doesn't believe that they're going to do that? So what is this investment going to be in? So we have a dividend limit of 1.5, M&A investment of 4 billion, expanding and renovating bases to expand and strengthen areas, business investment aimed at establishing preventative maintenance business, strategic M&A in line with above-mentioned expansion. Okay, nice. System investment, human resource, 1 billion. Advertising, expand recruitment, so employ external training, improving core systems to improve productivity. Equipment, R&D technology, 3.5 billion. Upfront investment in construction machinery. Okay, that makes sense. Upfront investment in construction machinery vehicles in line with, yeah, that's what this is also what I expected. Research and development aimed at labor saving, technology transfer. Okay. Dividend payout ratio is going to be increasing over time. So they're opting for increased dividends than do buybacks. Okay, I guess because they're increasing their capex, but I guess the market stance right now is that we don't believe in your capex, is what they're trying to say. I don't know why though. Number one in the market of achievements and trust. Construction and technology, construction supply chain. As an industry leader, we will strengthen and expand our existing business to lead and expand the market, and in new fields, we will develop and expand our value prop in line with our basic policy and group policy. D1 cutter, union pack. Thank you, Hayes Honda. No worries about that at all. I'm just going to this last company before I end the stream. It is 8 hours and 43 minutes, so by the time I'm done this, it will be the last stock. But yeah, have a great day. Thanks for tuning in so many times. I think you tuned in like 2 or 3 times today. Thank you very much. Good luck with everything as well. Yeah. Cutting drilling work business orders in construction for expressway renewal remain steady. Public investment related orders are also favorable. Decreased profits due to increased construction costs caused by soaring expenses. Building maintenance business, increased revenue and profit due to orders construction for major developers. Reuse and recycling business as a result of the exclusion of MTN from consolidation in the previous consolidated fiscal year, excluded from reportable segments from the current fiscal year. The main reason for the decrease was the exclusion of the reuse and recycling business from consolidation in the previous consolidated fiscal year. So the reuse business is actually not had a decrease in sales. Or it wasn't even included in the previous year, so if you included this year, then wait, how does that work? If you didn't include it, now you include it, there should be an increase in sales, right? Okay, not really sure. Okay, what are we looking at here? Sales by public and private sector, cutting and drilling segment. So let's see here. hold on. Public investment is like 70% of revenues. Private capital investment is 30%. In that category, 36% of public investment is due to expressway. Very small percentages are from railway and airport, and then the rest are from others. Drilling, cutting and drilling segment. I was looking at 2023, by the way. See, so public investment has been a mainstay for the company. The revenues haven't really increased. Balance sheet retains pretty stable. Expressway related sales are expected to increase. Profits, operating income is expected to increase along with sales growth, but non-operating income. As a result, ordinary income and net income are expected to decrease. Investment return trends promote efforts to strengthen research and development in construction systems. Increasing dividend yield. Diamond work, water jet, building maintenance, expanding into different cities. Sales non-consolidated and sales consolidated. Okay, so business characteristics. So cutting and drilling work business, diamond method, maintenance and repair compatible for industrial use. Diamonds are used to create roads and cutting and drilling structures. Less noise, vibration, dust, highly safe, efficient, and economical. 5 basic construction methods with excellent performance. Water jet method. Water is used to harden the concrete, destroy the union. Very high, ultra high voltage, and that's compatible with maintenance and repair. Very low vibration, so structures minimize impact on the device and prevent degradation. Removed by point, paint removal, surface processing, and also possible, and remote control also possible. Building maintenance business, wastewater pipe cleaning, high pressure drainage pipes for kitchen, bathrooms, cleaning, nozzle at the end of the high pressure hose. High pressure water is sprayed from the inside of the pipe to remove the dirt and scale. Okay. Water Supply Act to supply safe water. Number of offices and nationwide expansion. Okay, so I have a lot of offices nationwide. 18 in 2024. I mean, if you spread it out like this, it's gonna look very like in your favor. 1989 and 2004. Yeah. Okay, so I get a sense that this company isn't as good as Buffalo, but because they're not doing a big share buyback. But what I like about them though is that they're going to be increasing dividends, which is good. Because this rate is only around 20% of their DOE, but they're targeting like 30%. So this could increase to 60, right? So if it increases to 60, that's a pretty good yield. Currently, I do wish that they would buy back shares though. They really they kind of touch upon it, but there is no like concrete thing yet. So they're still below 1 times book. This could be a B plus right now. So 1716. I think that is better than most of these ones. Yeah, I would give this a B plus. B plus. There we go. So I think the top 3 companies today were probably 2674, 6676, and 1716. I think those are the top 3 companies today. Yeah, thanks for everyone for tuning in. That was a very, very long stream. I've been streaming for almost 9 hours. It's at 8 hours and 51 minutes. A very long time. This is the longest stream yet. We've had 116 unique viewers, right? Average view duration of 29 minutes. That is super, super duper impressive. This is like probably the longest duration yet. So really happy for you guys for tuning in. I am gassed, very tired. You know, had 2 coffees. You know, took like 2 small breaks, and my throat is not feeling the best right now, as you can probably tell. And also my reaction speed, the volume that I'm projecting at after hour 6 just dipped, right? So that's probably something I should do in the future, is just plan this out a little bit better. But 8 hours was rough. Yeah, so, but yeah, appreciate you guys for joining in. This is Continuous Compounding. If you haven't yet, please like, subscribe, and comment, and I will talk to you guys in the future. Yes. Yeah, I'll be continuing this challenge probably on Saturday or Sunday. Yeah, and yeah, my goal is to get to 10 or more A tier or S tier stocks, and I will post that as a weekly post, and you guys can tune into that. And I also have a new monthly stock pitch that I'm doing a lot of due diligence on, so you guys definitely check that out. If you haven't already, please check out, please subscribe to my YouTube channel if you haven't already, right? And here, I'm going live. Ooh. And then also my Substack, check out my Substack and subscribe there if you haven't as well. You can check out my Continuous Compounding overview. Basically goes over all the things, all the posts that I've ever posted so far, paid, free, whatever, all my content. The directory is right here. So yeah, and if you haven't followed me on Twitter, most of you are coming from Twitter, but if you haven't, please follow me on Twitter. And yeah, really appreciate the support and for you guys for tuning in, and I will catch you guys in the next one. Peace.